Hi everyone, welcome to another L.E.A.R.N Grow Invest meeting. This is gonna be a very good meeting. That's all I can say. That's all I can say right now. But we are joined by a very special guest today. We're gonna be talking about how to make solid investment decisions, which is something every single investor is interested in. And if it's your first time here, I'm Jermaine. I'm joined by Chike, our resident analyst, value investor extraordinaire. And so if it's your first time here, we are an investment community. We like to talk stocks, investments, real estate, just about anything that an investor would be interested in. We're not limited to stocks, though that's what sometimes a lot of our community is focused on, but we like to go actually farther and deeper than that, which kind of is a great way to introduce the topic that we're going to be talking about today. So we're going to be joined by David Mullings, the CEO of Blue Maho Capital, and he's going to be just laying it all out for us. It's a great discussion that is going to be on the way. So I'm just going to open up with a brief word of prayer, and then we just jump right in. So Lord, we thank you so much for this day and everything that it has brought. We thank you, Lord, that you have given us the gift of investing for us to increase and expand our resources for the betterment of our community, our families, and even our country. So as we join in this discussion, may your presence be here with us, and may it just be a great time of fellowship in Jesus' name. Amen. All right, everyone. So please do take a moment to share this video. Please invite every investor that you are aware of to join us in this discussion. David has made himself available to answer questions, so stick around for that. We also have our giveaways at the end. So those who are here just for the giveaways, it's going to be at the end of the discussion. So you still actually have a chance, I think, to follow the instructions. So if you go to our Twitter or Instagram pages, you can see the instructions, retweet it very quickly, tag us, and you'll be eligible to win. And I think that's enough housekeeping. So I have the great pleasure to introduce David Mullings. You wanted to say something, Chike?
Yeah, just one last housekeeping rule. Everything discussed, as we're not financial advisors, everything discussed here is for educational purposes only.
Yes. Thank you very much for that. I appreciate that, sir. So David Mullings is a resilient entrepreneur who adopts much of his business savvy from a blend of philosophies from billionaires Warren Buffett, the CEO of Berkshire Hathaway, and his mentor, Michael Leachin, chairman of Portland Holdings. In his relentless pursuit of excellence, he lends his keen knowledge of entrepreneurship, business, and finance to organizations both in the US and Jamaica. He's the founder and CEO of Blue Maho Capital Partners, Inc., a Miami-based private investment firm focused on Caribbean emerging markets. He is the recipient of several distinguished awards, the most recent being the 2021 American Foundation of the University of the West Indies Chancellor's Award for his excellence. He sits as chairman on a few boards with organizations focused on mentorship, innovation, and entrepreneurship. He is an advisory board member for both the Latin America and Caribbean Initiative and Advisory Board at the University of Miami Herbert Business School. Mr. Mullings previously served on the board for the Institute of Caribbean Studies in Washington, D.C., and a board member of the Fund Black Founders. He is a graduate of the University of Miami. Please, guys, please do welcome David Mullings. Hey, David.
Thank you for having me, guys. Really appreciate it.
Thank you for agreeing to be here.
Well, I was always going to agree. It was a matter of timing.
Yes, that is true. This has been definitely a ways in the making. So why there's so much that I want. So, guys, I'm just here just enjoying the pre-live discussion that we're having. I was trying to negotiate with David an exchange for one of his memorabilia. So that's why I'm hoping that he will you know.
I doubt that's happening.
You have to earn. You have to earn things, right? Things have to be earned, not given.
Yes.
As we
Fair
all
enough.
learn that over time. Yes.
Fair enough.
But what memorabilia you want? You what is it that you wanted in here?
It's all about.
Oh, you want? Okay.
Black
the
Panther.
Black Panther. Okay.
Limited edition.
Yeah, very limited edition.
All right. So we're definitely gonna jump into it. For persons who are in the chat, if you have questions along the way, post them, and we'll definitely get to it in the Q&A. So David, I mean, there's a lot that we're gonna cover, but I definitely think it's a good place to start by talking about what it means to have a wealthy investment mindset. Let's start there.
No, and again, thanks for having me. As always, as much as you started with that disclosure, that is, we're not financial advisors, it's for information purposes only. We had a call with our securities lawyer today, so I need to make sure that I restate. We are not here for general solicitation purposes.
Yeah.
It's information purposes only. I know there are a few people who want to ask questions directly about Blue Mohawk Capital or future ideas about going public. And that's not what we're here to discuss today. We're here to talk about the overall idea behind investments and not get into Blue Mohawk's portfolio or what we buy and what we own, what we plan to buy. So we get that out of the way. I don't want to get in trouble with the SEC. So I'm excited to share. For me, it starts with mindset. The most important thing that I've seen around every successful person that I've spent time with is their mindset. Their mindset is different. The way that they deal with failure, the way that they deal with individuals that they need to have work on their team. But that's what it comes down to. You need to have the right mindset. And unfortunately, most of us are raised in homes where we don't discuss money, we don't discuss finances, we don't talk about wealth creation. In fact, sometimes we despise the wealthy. And so we have to make sure we have the right mindset. But it's understandable if you grow up with scarcity, you're not sure if you're going to be able to afford school books, or you're not sure if you're going to have breakfast tomorrow, then you end up having a scarcity mindset. And I remember at a family office event about 5 years ago, an individual who comes from third generation, they're the third generation, their grandmother was still buying canned food and would have a year's worth of canned food stored in her cupboard. And the kids were like, "Grandma, we're rich. Why are you buying food and storing it for a year?" She grew up in the Great Depression. She could not change that mindset. It became taught to her in terms of scarcity. So just in case, we are covered. So it is something that is hard to shake. Don't feel embarrassed about it, but recognize that you have to shift from a scarcity mindset to an abundance mindset. And then recognize that wealth creation is different from wealth preservation. You invest differently to create wealth versus preserving wealth. And so I think it's important to understand how the wealthy think, but how they got there, not just what they do. Right? Knowing what somebody did is not enough. I need to know why they did it, and is it repeatable? Is there a framework that they can use? And that's exactly what Warren Buffett talks about this. Michael Leachin obviously has codified it, in my opinion, in the best way that I've seen of anyone.
Yeah, that's I definitely see that as well, where sometimes you can move your status is better, but your mindset hasn't changed, and it just limits just the way you view the world. And I agree with that 100%.
So and I know somebody probably going to ask about specifics now on the mindset, or how can I change my mindset? And I would say it comes down to what is knowledge. You gain knowledge from teachers, you gain knowledge from the people who you spend time with and learn from, you gain knowledge from mentors, you gain knowledge from reading, you gain knowledge from watching the show. You are gaining knowledge every time you watch Learn, Grow, and Invest. It's important, though, that Ray Dalio says this, right? Runs one of the largest hedge funds in the world, and he talks about believability weighted decision making. So you need to first know who to trust before then you listen to them. You don't ask everybody for an opinion, right? We've heard that joke that an opinion is like, what we have. Everybody has one. You need to know who to ask questions of first before you ask them. Not everybody's opinion is going to be good for you, but get their opinions and then decide, okay, so if you want to know how to make money, You're probably not going to go and ask a poor person how to create wealth. You're not going to probably ask a barber how to go and invest. If I want to learn about cutting hair, I definitely going to ask my barber. If I want to learn about law, I talk to a lawyer. If you want to talk about creating wealth via investing, you need to study people who've created wealth via investing. You can create wealth in other ways. And then most importantly is to recognize that there's no one right way. Right? We talk about one way. Value investing is, we are cut from the same cloth. That's one way of investing. You should go to the world, the audience should go and look at all options and then decide which one fits their risk tolerance. How much risk can you actually take? How much capital might be required? And then you decide, this is the one I want to follow. But once you decide to follow one, you need to stick to it. You don't want to try to learn to kick a free kick because you want to be a star football player and you go and study Ronaldo and study Messi and go and study somebody else, and then you're trying to do all of them. That's not going to work. You need to pick one. So as Mike would say, you find a role model, get the recipe, don't change the recipe.
Don't change the recipe.
Right. You're allowed to change the recipe after you exceed the role model. But that means that you now have what Mike considers as three rules for outside success. You now have a framework is number one. Number two, you now have control of emotions. And you do that by reverting to the framework. And we know investors definitely sometimes let emotions run in. So framework, control emotions, and you have control by reverting to the framework. And then lastly is access. That's the last thing you're going to need. You need access to capital, access to opportunities to invest. You need access to good people. Those three things are crucial. Now, obviously, we want to improve access. That's why Blue Mohawk Capital exists. And Learn, Grow, and Invest clearly exists because you want to improve access to knowledge. Hopefully, that leads to access to capital because they improve their knowledge. And then ideally, they're going to identify opportunities and know how to identify good, great, and bad opportunities. That's why we're here tonight.
So I have a question on that. Just one quick one. In terms of, so we are starting our investment journey basically. And you mentioned the point of you need to have capital. So some persons are of the opinion that to have capital is to have a wealth of money before you can really start investing. So what is your guidance for them on that in terms of where to start?
Well, again, that's a mindset shift that's required. You don't need a lot of capital to start, but you need some. So it's important that you do two things. One, you need to increase present value. Mike would say PV. I need more PV, present value of capital. So how can I do that? Do I go and start a second job? Do I earn some more money? Do I sell something? Do I increase my ability to earn, my earning power itself? That's why most of us go to school, is to increase our earning power. But you need to start. It is important to build healthy financial habits from early. Right? People would say the best time to plant a tree is 20 years ago? The best time is now. So start. I don't care how low it is. You could start with $10, but start and then do it consistently because it then builds up a good habit. It's going to take time. Every time you get paid every month, you put a little bit of money into that investment account and you keep doing that, which happens to also help your dollar cost average. So that's not a bad thing.
Right.
But build good habits. Don't be afraid to start. Don't think that you need to wait till you have $100,000 or $500,000. Start today and then do it consistently. That's a mindset shift that's required.
So on that mindset understanding, do you remember, if I can jog your memory, do you remember when you first started, what was your first investment that you made at whatever age it was that you made it at?
So I started college at 15 here in the US, graduated at 19. So while I was in undergrad, I bought my first share. I bought Dell. Actually, I bought Dell. This is back in 1998 while I was here. I bought Dell. I bought Hewlett-Packard. I remember I was meeting with mom and dad. They had owned stocks in the past, and so I was working. My first job was actually a Blockbuster Video at 16 years old. Yeah, so that's a great lesson in management that doesn't think long term, right? But it was interesting. I earned money from there and then I ended up buying some Dell stock and some HP. And the reason I bought it was that this was the dot-com bubble was taking off. This is 98. And I felt like there was going to be a great opportunity around computers and scaling. I couldn't tell who would win though, if it was Dell or Hewlett-Packard. I ended up selling them after the bubble burst anyway, which turns out, not necessarily to be a bad thing in the way those companies worked out. But those were the first two that I purchased and they were here. Yeah.
So on that, in terms of the bubble bursting, what was the lessons that you learned if you had gotten out after the burst? That is.
Well, so the important thing is that I wasn't doing that whole invest every month and be consistent. I bought some, I sat there, I bought some eventually again, and then sat on it. I wasn't trying to actually build a portfolio. And that was partly because I was intensely focused on becoming an entrepreneur. I knew that I was going to start a business. So I was trying to build up some capital to take it out to then launch what we eventually launched, Real Vibes, in late 2001. The site launched February 2002. So the goal was to put together some capital to then do a business. Well, if you're going to launch a business, in most cases, you actually take money from whether it's a 401k retirement account, you take it from, if you have an emergency savings account, you shouldn't take it from there.
Oh dear.
But you take it from your vacation money, you might have been saving up to buy a house, and you say, you know what, I'm going to put that money towards this instead. And you make a sacrifice. But I knew that the best payoff I could get was trying to invest in myself in that business. Yes, there's a large chance of failing, but you need to take the shot first. And if we fail at the business itself, we're going to learn from that business, and that knowledge will be able to be applied to something else, which clearly we've now reapplied it. So that's what I did. The big lesson with the dot-com bubble, though, was valuation of a company, right? Their market cap of a public company. Private is different, but the valuation of a public company does not always depend on fundamentals. Right? And we've seen companies today that look like that. Of course, the difference between now and 2000 is that these companies actually are earning money. Facebook, for example, Amazon came out from what, 94, 95? It's still here. Well, we couldn't have predicted that Amazon was going to be one of the winners. You couldn't predict that Google was going to be a winner and Yahoo was going to be a loser. We could not have predicted that. So it reminded me, and this was, back then we would now call it the third industrial revolution. Now we're in 4IR. It simply means that you need to be on a wave. You don't necessarily know which surfboard is actually the one that's going to do well. I don't know. But a rising tide does lift all boats for a while. Yeah. For a while, but eventually some of those boats actually have holes in the bottom, but they're going to sink. It will rise for a while, but some of them are going to sink. And some of them turned to actually not have been boats. They were just, fake half of a boat, kind of just tricking you at the top. So it is a good reminder that markets are not efficient. I do not believe in the efficient market hypothesis at all, because valuations should never have gotten to that point if it was efficient. And again, that's because of emotions. Everybody thought the internet was going to change everything, and they didn't care if Webvan wasn't making any money, or these grocery companies, right? I'm buying it because it's internet. Just put .com in your name and it just skyrockets. Well, we need to be very careful, and we see that happen again now, in my opinion, in another generation. You just need to stick certain things alongside a name, and then people rushing to buy it, and that's dangerous. We have seen this party before, and the music must stop.
True, very true. So in terms of entrepreneurship is another form of investing, and it's investing in yourself and the belief of yourself. I have to ask, what was your drive to start? How did you think or know that, you know what, this is what I want to strike the iron and do, and I'm going to be successful at it?
Yeah. Well, so that's easy. First of all, if you're going to do something, you better think you're going to be successful. If you think you're not going to be successful, then I guarantee you're not going to be successful. All right, mindset again. So you need to at least think you can do it. That's the first thing. But most importantly, I finished high school at 15, and dad and mom asked me, what do you want to be when you're going to grow up? And I said, I want to be a positive role model for young people around the world, especially young males in Jamaica. And so dad is like, oh, geez, man, that's not the answer we expected, right? That is a medical doctor and a lecturer. Your mom is a nurse. And I said, but we know you, we raised you, so we know you have a plan. What's your plan? I said, I have 4 options. And number 1, I could actually become a lecturer at university, just like you did. And Dad said, I'm flattered, but the people who need the most positive role models are the ones who drop out of high school. So put that to the side. What's number 2? So number 2 is that I could become a politician and eventually become Prime Minister of Jamaica and be a better Prime Minister. I could weed out corruption. I could focus on dealing with security and crime. I could ensure that we invest in education properly. And I would want to be a better Prime Minister with better policies. And so Dad says, well, that's impressive. You might be able to do that. But in our opinion, in order to get into a position of power, you need to break every rule, morals, and values that we raise you with to get into that position. And you're probably going to get a shot. So that's off the table. Like, you can't. Typical uptown Jamaican parents, not surprised. He said, what's the last two? Well, the last two is I could become a star footballer as playing in Jamaica. I could become a star footballer and use that for good. I think athletes can be very good role models. Or I could become an entrepreneur who would eventually make my own money and own my own film and music companies to influence what we listen to and what we watch and how we see ourselves. And so Dad said, well, those aren't mutually exclusive. So starting this summer, every summer and every Christmas, you and your brother need to present a plan, a business with a 5-year plan, 5-year projections that we can invest $10,000 in. And so we started doing that every summer at 15, that's 1996. And they said no for the next 5 years. They said no every summer and every Christmas. And then I did play football. I played for Real Mona in Jamaica for under 20 and with the senior team. So I played in the National League in Jamaica, which is second division. And then I got a scholarship to do my MBA. And that first semester of the MBA, which is September 2001, we had a class. My brother and I did the MBA together. Robert is a year younger. But we did it at the same time. And the class, the teacher said, hey, you need to do a pitch for our business. And we pitched our business in the class. One hand went up, and the question was, can I invest $10,000? And we were excited. The teacher was like, wow, I think you're onto something. We went back to mom and dad and said, hey, somebody wants to give us $10,000 to kick this off. And they said, no, don't take it. You don't know if it's smart money. And that was the first time I ever heard that term. Like, what do you mean smart money? So you don't know if your values are aligned. You don't know if the person can bring anything to the table besides money. You just met them. We will give you the $10,000 instead. Nice. Oh, you actually had $10,000 this whole time. I didn't know this, really. And they're like, no, we're not giving you $10,000. We'll absorb your living costs up to $10,000. You're going to get part-time jobs, and all the money from the jobs you can put into the business. And so we had lived in their house. We started paying them, stopped paying rent. We were paying rent, and they took over the health insurance, the car payment, all those things. And then we took part-time jobs at the movie theater. So we do our MBAs in the day, and then movie theater would work out on the weekends as supervisors for the concession stand. That explains why I love movies so much. But that's what we did. We pumped the money into the business, and as it started to grow, we got traction on the website. Then mom and dad actually came back and wrote a check for $10,000. And we're like, hold on, why you make us go take jobs? Why I never invested $10,000? And that's when dad said, if we had given you a check for $10,000 the first time you started a business, you'd have spent it differently than if you had to earn that money. You treat the money differently when you earn it. And that was a really good lesson that I wanted to pass on to my children and other people. You can get your kids to think entrepreneurially, but don't just hand things to them. Have them earn it and understand the sweat that went into it. You treat capital differently when you have to earn it. And then we reached out to someone I consider a cousin. My dad is his brother's godfather. His dad is my brother's godfather. He's now my son's godfather, and that's Richard Powell Jr. Richie was a year ahead of me at Campion, and then he had gone off to Harvard. And Richie ended up in a business plan competition between Harvard and MIT. He raised like 1.4 million US or so to launch his tech company. This is back in 98, 99. Cover of Inc. magazine as a 19-year-old Jamaican in his Reggae Boys jersey. Just impressed all of us. Nice. On the floor above Yahoo, and then the dot-com bubble obviously popped that. But he was able to exit. His investors got back some money and went back to Harvard being called .com. So I said, hey, Richie, we're building a platform. It's different from what you built, but you've done it before. Can you be the chairman of our advisory board? We want to make fewer mistakes. Certainly, we don't want to repeat your mistakes. And so Richie agreed to be the chairman and put in some money as well. And what he said, though, is that we have a 99% chance of failing. But we're going to use this to learn the levers of a business. The best investors are actually operators and should have been entrepreneurs. They understand what it takes to actually scale a business, to hire a team, to manage a team, and how you grow that. You're not just an analyst that's never grown a business or never started a business. And so that's what we did. And he said every month he's going to send me a book for me to read that his mentors are giving him. Then we'll discuss it. Every 3 months I'd have to go to Orlando to sit with him to have a board meeting and discuss. The only requirement was that I had to start studying Warren Buffett, though, because he felt that it was much easier to raise capital to buy a profitable existing business than to raise money for a startup. And he had launched a private equity firm that had $40 million under management in his early 20s. And so that's how I got onto Warren Buffett. And so it was really Richie that instilled that in me during that time. But that's why I knew that I had to do entrepreneurship. This was never about money. This was about being a positive role model for young people, especially young males in Jamaica. And I wanted to be able to earn enough money to help us to see ourselves differently we have some role models, but I don't think they're always positive role models. And it's the same issue we have in the US. If you're only looking at rappers and dancehall artists and sports athletes as your role models, then we're missing out on too much, in my opinion. And that's why I set out to do this.
That's very true in truth.
So I have to succeed, right?
Yeah, that's true. There's no room for failure at all. Well, there's room to learn, but
room to learn. But you see, that's a mindset shift a while ago. Most people think of it as failure. Oh, I failed. No, if you learn something, then you didn't fail. If you learn, you didn't fail. That's how you have to look at it. You don't fail the exam. You can go back and retake it. I learned something though.
True. So with that, and that was a lot to say around mindset. And you use the term framework a lot. What would you say? What is the framework that definitely investor, entrepreneur we should or you would impart that you've learned and you would impart us?
Right, the one I follow, because I wouldn't say that everybody has to follow. The one I like and I recommend, I think works is what Michael would say. Mike, Leachin would say he learned from Warren Buffett, and he says it's really 5. He used to call them 5 principles of wealth creation, and then he and I spoke in December, and I said there are 5 laws. Now you've done it and affiliated with $6 billion company, so I think those are laws now, not principles. So we call them now the 5 laws of wealth creation. And so what Mike would say, number 1, if you think of any wealthy person who's created wealth, not inherited the wealth, not won it, but built it, created wealth, and they're on probably the Forbes list. And that person owned a few businesses that were domiciled in strong long-term growth industries. They understood the business and how it made money. They were prudent managers of other people's money, and other people's money needs to be thought of as either investors' money. It could be bank money, borrowed money, or customers' money. When a customer gives you money, that's other people's money. You have to manage it prudently, or your business is going to go bankrupt. But last, 5th and most important is that they held for the long term. And so when I look at the people I look up to, they all did that. They held for the long term. So in most cases, those businesses actually were private. They held for the long term, and then the business went public or they exited and sold to someone else. So those would be the 5 things I look at for wealth creation. And I think that everyone can learn from them. It's not the only way to do it. There are other ways to do it, but to me, that's the simplest way. Warren Buffett has done it. A bunch of people have followed Warren Buffett and done it. So I don't need to do anything different.
So I'm gonna throw you a curve now. So there's the way how we've moved in terms of into the 4IR, fourth industrial revolution, and the digital age. Everybody would say that things have sped up exponentially. And we are now seeing a case, as we started this discussion, it was about valuation, and where valuation is not easy to do anymore based on what is on paper, right? So the whole for the long haul mindset is being challenged now. I see very much so. How do we combat that? Us as long-term investors, us as value investors, how do we combat that? How do we tune out that noise, and stick to our
right? Well, so it's been challenged before. It's been challenged repeatedly. So their value investing goes in and out of vogue, so to speak. So if you want to be a value investor, first you have to understand that growth is a component of value. Too many people look at value versus growth. So if you call yourself a value investor and you're traditional, you would not have bought Amazon. But if you understood the growth trajectory of that company and looked at Walmart and what they had done in the 80s versus Amazon, you'd not have had a problem that they had invested R&D into building and what they built, because for 10 plus years, Walmart wasn't cash flow positive. They were actually cash flow negative. They were investing in building the stores. Well, once the store is built, it's like building a highway. The toll comes after that. So you would have to be thinking longer term to see that this company could actually grow into its valuation. So if you can remind yourself that growth is a component of value, then it's easier to tune out noise. But secondly, and most importantly, is you have to treat it like a religion. If you decide that this is the framework I'm going to follow, this is my investment strategy, this is my religion. You can't come and get me to convert. I don't care you're not going to get me to convert, because I am not going to listen to you. You can show me some other people, but this is who I'm following, and that's what I'm a disciple of. So When you decide that you're a disciple of something, then you move forward and you can actually tune out everybody else. I think that's very important. You actually need to be disciplined as an investor, but it's no different from learning a sport or learning a language, learning to play a musical instrument. It requires discipline, and you have to put aside things. If you want to be Venus or Serena, or you want to go and be Tiger Woods or Michael Jordan or LeBron James or Kobe Bryant, you have to put in a ton of work, sport. In that sport, you can't try to play baseball and play basketball. Michael Jordan literally proved that. You can't play both at a high level. Pick one. So the same way with the investing thesis, the investing strategy, pick one and stick to it. If it turns out it's not working for a very long time, okay, then you need to think twice. But pick it, stick to it, ignore everybody else. And yes, things have started to speed up, but when you talk about valuation, it's hard to do. Valuation, in my opinion, was always hard to do unless you want to pick something easy. If you want to just use a PE ratio, then yes, theoretically, valuation is easy. But that's not the only way to do a valuation, as we know, right? You might want to look at the DCF model, right? Discount cash flow model, which is not perfect either. What assumptions you're going to make, that requires assumptions. Well, you could change some of the assumptions, but could you have assumed that Amazon was going to create AWS? No, we couldn't have assumed that. What you needed to look at was management. Does the management understand this business? And is there symmetrical alignment, right? So what Michael would say is that we're missing a lot of alignment because most businesses are not operated by owners. So if I'm just the operator of the business, but not the owner, it means that if I do really well, I do a good job in the business, I get a bonus. If I do okay with the business, I get a smaller bonus. If I do horrible with the business, I get a golden parachute. I win, tails, you lose. They don't lose. So there's no symmetrical, it's asymmetrical alignment. What you want is that the person is an owner operator, they're serious about this business because if they do a bad job, they go bankrupt. You just lose some money. That person is going to be extra cautious with the way they approach that business. So you look at somebody like Jeff Bezos and say, you know, is this guy a good operator? Is he hiring smart people? How are they deploying the capital? What percentage is invested in R&D? Are they forward thinking? Great. I mean, if I meet with some management teams and they don't read, they're not going to invest in them. Why would I invest in somewhere that is not interested in learning new things and learning about knowledge? And imagine saying that, oh, we don't need computers in our business. Well, then what would have happened when COVID just hit? We had a pandemic.
That's right.
That's crazy. So management actually matters. When you buy into a business, you're buying people. So we need to care about the people. So that's what I use when we're thinking about valuation. And then we don't want to be, is it undervalued? Is it overvalued? We don't know. I can't project 5 years out, 10 years out like a Facebook. What I need to focus on, is it a strong long-term growth industry? 4IR shows us, we know exactly what strong long-term growth industries are right now. We don't have to think hard about that. Renewable energy, is that a strong long-term growth industry? I think so, right? IoT, Internet of Things, is that a strong long-term growth industry? I think so. AI and machine learning. Well, yes, these are all strong long-term growth industries. Electric vehicles, yeah. You need to decide which ones you want to buy. That's where the analysis is going to come in. And I think you should look at management. Look at the financials, but look at management as well.
It's actually very important. Funny enough, there's a book that I would say, actually, to be honest, I'm struggling to get through it. It's a bit daunting. Don't know if you've ever seen or read it. It's called The 5 Rules of Successful Stock Investment. And I'm pretty much on that. It's written by Pat Dorsey from Morningstar.
Wow.
And exactly what we're talking about now is exactly the chapter that I'm on, which is chapter 7, that deals with the valuation of the company, but from the standpoint of management, etc., and understanding the company from that standpoint as being
that standpoint. Management is one of the biggest risks, but there's a new layer that we need to include, and that's something that we're doing certainly at Blue Mohawk Capital. We hear about impact investing, ESG, sustainable investing, and I would say that we haven't been putting enough around climate risk on there, right? ESG matters, the governance side, but I think about this, if you are a resort company in the Caribbean, I think you're going to be worried about beach erosion. I think you're worried about rising sea levels. If you're a farming related company or you're buying farm produce,
drought,
when they get too hot or you have a drought, water scarcity, then you're going to have an issue. That's a supply issue. So We want to talk to management about climate resilience, about climate change. Right? This is real, and the Caribbean, in fact, especially, is probably the most, I would say, most affected and most likely to be affected by climate change.
Climate change, yeah.
So we have to think about that as additional risk, and then you have political risk, right? Most of us who have gone to any basic business class know a SWOT analysis, right? SWOT: strengths, weaknesses, opportunities, and threats. But too few people talk about PEST analysis: political, economic, right, social, and technological. You have to do a PEST analysis for the company, the country, the region as well. Because imagine you go into a country and say, great, I am going to invest in this business. But then there is political risk. There's a coup. And somebody has taken over the country and they just expropriate the assets.
Right.
You're in a problem. Like, you literally, so you think about, there's a Jamaican company right now that has issues in Haiti. Haiti has been an issue for them. And so pest analysis matters. We need to start thinking through that when you're building a portfolio or when you're looking at your own. If it already exists, you need to look at that and start thinking about climate risk, because I'll be honest, there's this thing called TCFD that is coming out. This is more on the European side. It's being pushed by Mike Bloomberg, but it's not accepted. Larry Fink talked about it in his most recent letter to investors, which is BlackRock, right? This is like $3 trillion under management. This is about climate change financial disclosures. So they are going to be pushing for climate, disclosures, and within the next probably 6 to 9 months, the SEC is going to either require TCFD disclosure alongside a 10K, or they'll come up with their own standards. But this is being pushed because it is actually a financial risk. If I'm buying into a bank, well, I would like to know what are your climate risks, because you're lending money against assets. And if you lend money against a bunch of houses or a factory and it disappears because sea level came and gobbled it up, that's a problem for the bank. We need to understand that. So this is real. We need to start thinking about that as investors, especially because we're thinking long term. We're not here for 2 years or 1 year. We're not traders. We're buying for 5, 10, or even longer to pass it on to our kids.
Very true. But before I ask the next one, then I want to stick on that for a second. And I know you're very much vested, very much repping the Caribbean and specifically Jamaica, actually, and you say it all the time, which I believe is true as well too. That people don't, or the global world doesn't see the great potential of what the Caribbean, Jamaica, has always had to offer. To be very honest, not now offering, but always had to offer. But what you've spoken about in terms of pest, in terms of not necessarily political, but the environment for sure, and what this pandemic has taught all of us in the Caribbean who are resilient first and foremost on tourism. What is your view of how do we make ourselves more resilient, more fortified should this ever happen again? What do we need to do? What do Caribbean countries need to do to make sure?
Well, so the thing is the answer is common sense. We all know this, right? We could just probably go to a fifth form class anywhere in the Caribbean and they could tell you we're too dependent on tourism. These economies are too concentrated. But we know that as investors, because we look at a business and we look at their revenues and say, oh, no, those revenues are too concentrated from one geography or one country, or they're too dependent on one supplier. So concentration is a bad thing when it comes to revenue. And so, whether it's Jamaica or some other countries, Bahamas, way too dependent on tourism. So we need to diversify economies. And we shouldn't wait on outsiders to come in and provide solutions to our problems, right? Jamaica is a land of wood and water, but we still have drought problems. Jamaica have sunshine. We have not. Germany has deployed more solar per person than Jamaica. Like, hello, it's not that complicated. Let's start dealing with these things. You want to look at climate resilient housing. We need affordable housing. Well, let's build them in a way that's going to be climate resilient. Let's focus on cool roofs. We know we need green space. And we look at food security. Okay, well, let's make sure we're investing in smarter ways to farm. There are smarter ways to farm. Let's now incorporate that as well. But guess what? If it works in Jamaica, it can work anywhere else in Latin America, Sub-Saharan Africa, Southeast Asia. We should start thinking of us as a R&D hub that's perfect to go into all these other emerging markets. Test it in the island, and then we can expand beyond that. We know that energy efficiency is going to be a big issue. We want to decarbonize the economy. Well, how about let's be more efficient at using power as well? Well, we could do that. We could work on that. We shouldn't just focus on power generation. We need to actually focus on reducing consumption. And let's focus on being more efficient. And as I said, water scarcity, I think, is a big one. That's what the next war will be fought over, is access to water.
Yes.
We can lead in that. And you don't want to have a big rainstorm and then have a landslide. That don't make any sense. We have plastic. That's a big issue. We have coral reefs in Jamaica. We have beach erosion. If we can solve it here, we can solve it in all these other islands and deploy that technology. Or it could be, we might use AI. Whatever we're doing, we could test it, and then scale beyond that. So I would say we need to invest more in R&D and innovation to solve global problems that we are experiencing ourselves, and allow us to diversify our economies. And then, of course, use the advantage of our location. Jamaica already has been doing it, at least on the export side, right? Transshipment. 7th largest naturally protected harbor in the world. We're in the middle of major transshipment lanes. So that's great. We're going to expand that. I expect them to roll out the Vernon Field project, which I've been writing about for more than a decade now. And I can see that becoming a huge opportunity. You could compete with Changi International Airport for international travel and compete with Miami. Why fly through Miami where you need a visa? You could do Brazil, Jamaica to France or London. So that makes sense to me. There's an opportunity there, and you would add cargo. And so we have blatant opportunity. And then we talk about organic farming. Isn't that a big thing? Well, for the most part, if we could be certified, most of our stuff is organic. The farmers can't afford the fertilizer. So how about we make sure that it's truly organic, and then we can participate in that, because that sells at a premium. And of course, we want to move up the value chain. You don't want to just, for example, have call centers or sell the mango. You want to sell the mango puree or box it. Yeah, I pointed out, up to today, I did a meeting with someone who was asking me about what kind of companies we invest in, and they're only in Jamaica. I was like, no. They happen to be headquartered in Jamaica. They're multinational companies. And I asked him, where's Nestle from? And like, thinking, I was like, Nestle's from Switzerland. What's the population of Switzerland? Like, what, 9 million or something? I mean, Switzerland is still small. But Nestle didn't focus on just its home market. Nestle didn't just focus on people from Switzerland who live abroad. Nestle focused on selling to the world.
That's right.
That's right. Why can't we can build global brands? We have built global brands. Jamaica is a global brand. Attach it, Blue Mountain Coffee. Let's attach it to more things and be more efficient. Ideally, bring down production costs. But you said Jamaica was known. I would say this is not that people didn't know the value of Jamaica. The reason that the British came to Jamaica, they were trying to take it from the Spanish. They knew it was valuable. That's why they came. Right? Port Royal, alongside Boston in the 1400s, were the two wealthiest cities in the Western Hemisphere at the same time. So we have been there before. We need to get back and then exceed what we've done. We need to remember that we were the jewel in the British Empire in the Western Hemisphere, India in the Eastern Hemisphere, and Jamaica in the Western Hemisphere. There's a reason for that. Let's do it again, but keep the wealth here for ourselves.
Here this time.
Yeah, keep it here this time.
Well, it's gonna be. That's always a challenge, but you're right. Jamaica is strategically placed where it is to be the hub. And actually, we had this discussion. I actually brought this up in our group as well, too, that it has irked me to no end with, as we did shipping, we were supposed to do the dredging for large container Panama ships to compete with the Panama Canal. We were supposed to, before everything happened, if you remember, Cuba was talking about becoming the airline hub, and Jamaica was supposed to be that can be that and should be that easily. Right. 2 major airports already, and you said verbal.
So we're already complete in phase 2 of the dredging. I mean, obviously, this post-Panamax vessels can come to Jamaica. They can dock in Miami, and we're going to do phase 3. So I'm not worried about the harbor and the dredging stuff. I look forward to the Vernon Field project and what happens with that aerotropolis they're going to build. With breaking bulk, with cargo, with servicing Airbus planes, and being the only location in the Western Hemisphere to service Airbus. That at least allows us to use the Air Jamaica maintenance unit that was kept when we sold Air Jamaica, the company itself, to Caribbean Airlines. So that makes sense to me. I know that Singapore is going to be working with us and helping us on that. That's amazing.
Awesome.
I think that's transformational. We have the Chinese are coming into the light manufacturing center that they expect to generate 60,000 jobs around aluminum. So we've gone from red dirt to exporting alumina to then, literally we have to import the can and then put the coke in it. How about we actually make the can in Jamaica too? The bauxite is already there. Our problem is the cost of energy. That's why we couldn't build a smelter in Jamaica. Electricity is too expensive. We're slowly bringing down the cost of electricity, but we need to move faster. And so obviously Wigton is there, and we've had Paradise Solar Park. We need to see more things happen. Natural gas is not enough, and that's not decarbonizing the economy. So we might be penalized at some point because of carbon, but we need to move faster, right? The Prime Minister said boat speed. That's what Prime Minister Holness said. But let's actually see it. Let's actually move at boat speed. Let's see companies investing in R&D that can scale. The way I put it is this. Remember I was on Bloomberg last year, they asked me, how do I pitch Jamaica to a person that walks into the room? And I said, Jamaica should be the Singapore of the Western Hemisphere. And he was shocked. He's like, oh, that's bold. I was like, of course it's bold, but it's true. So I said this was 2 years ago. I spoke for JBDC at their accelerator graduation. They have an accelerator program down there that I'm really impressed with. And I said to the entrepreneurs in the room, and I said to them, guys, I need you to answer a set of questions to me, and you're going to tell me which country am I talking about, Jamaica or Singapore?
Or Singapore.
And I started by saying, all right, well, this country was a member of a federation, exited that federation or had to exit, and then became independent in the early 1960s, and then became independent from Britain. Which country, Jamaica or Singapore? Which country? You tell me. Which one, CK? It's both. Both countries. Both countries did that. Singapore, right? So that's both. So the next one I said to them, I was like, this country has one of the largest naturally protected harbors in the world, has a British-based legal system, is in the middle of major transshipment lanes, and is next door to a very large market. Which country? Jamaica or Singapore?
That is definitely Jamaica, for sure.
But that's Singapore too. That's both.
Which natural harbor? Well, I don't know of Singapore having their natural harbors. I always hear about Jamaica, but I know about Jamaica's because I always hear about
Singapore actually has way more shipment than Jamaica. Like if you're going to look at where Singapore is, you're going to be very surprised about their strait. So it's both countries. So the third thing I said to them is four things. The third one I said, all right, well, this country speaks more than one language, has a British-based education system. Which country?
But it would have to be both as well too.
It's now both. So the last one I said to them is that this country had a prime minister who decided that corruption was not going to be allowed in his party and in his government. And they invested in education of their people because they realized that was the most important thing. And they didn't have any hinterland. In fact, they had to import water and fresh fruits. Which country? Jamaica or Singapore?
Well, I know Singapore's history with that. So Singapore.
Yeah, but the minute I said that they wouldn't stand for corruption and they invested in education, I mean, that just tell you already, Singapore. That's not Jamaica. That's obviously not Jamaica. So what we need to do is obvious. It's been done by everybody else. South Korea invested in education and they did it. Think about it. South Korea in the 1950s had a war, right? South Korea, North Korea. Korea had a war, a Korean war. And you now come back and there's no school. The place has been bombed into nothing. And kids are having school in open door things and going to make sure they go to school. And they decide we are going to be competitive in making appliances and cars. They actually did that. The government decided we're going to cars and appliances. And we have LG. You're probably using a Samsung phone. They pulled it off. They focused and got it done by investing in their people in education. That's what we have to do. That's fundamentally what we have to do.
True. That's very true. So with that being said, I'm going to segue into the next question on the framework of what we were talking about. Companies are let's do around this and around moving the countries forward, industry forward. What are the traits that you look for in investing in what are good companies?
All right, so before we get to companies, we start with industries and regions. And so what Mike would say is that you need three things to be excited about investing in a company, an industry, or region. And number one, there should be a difference between perception and reality. Right? The Caribbean definitely has that. Number two, inefficiencies must be present. That has to be there. But there has to be a willingness to deal with the inefficiencies. And then number three, there should be a lack of equity capital flowing into the region, flowing into the industry. And then you can go and start looking at the company. So that should get you excited, those three things. As I said, number one, perception is different from reality. Number two, you want to see inefficiencies must be present. And then number three, lack of equity capital flowing in. If those three things are present, they're going to read, the 10 traits of great companies that Mike said to me. And we turned into that document. And so he says, number one, the owner of the business is also the operator of the business. Remember, we talked about asymmetric versus symmetric alignment. So that's one. Number two, ownership is concentrated. I want something that has some sort of concentrated ownership. I need to be able to hold somebody accountable. And if I feel pain, they should feel more pain. Right. Number three, key stakeholders are personified in the company and vice versa. When I think of the company, I think of those key stakeholders. When I think of the key stakeholders, I think of the company. It's focus. I know what they focus on. It's their legacy. Number four, we would want an autocratic management style. When it comes to business, we're not here for democracy. You know what they talk about? What they say, a camel is a horse designed by a committee. That's what I've heard. We're not into the design by committee companies and run by committee. That's the worst thing. You want to have autocratic management. Somebody's a CEO, and then they move from there. So autocratic management. Number five, we want entrepreneurial management. And so that, remember I thought about working at Blockbuster? There's this company called Netflix that Blockbuster didn't want to buy. And I thought that was crazy not to try. That management was not entrepreneurial. So you have to disrupt yourself before you get disrupted. And we know a whole bunch of companies are dealing with that right now, right? Disrupt yourself before you get disrupted. So management needs to be entrepreneurial. Number six, we want to see low turnover in management positions. If you're changing management every year, every 2 years, or your board is resigning constantly, that's a problem. That should be a problem. That's a red flag for us. We think that we want to see longevity with management. You want institutional knowledge. The next one is that we want symmetrical risk and reward for management. So I want to look at the management remuneration package. They have a big golden parachute. Now, when do they get awarded stock? Is it for hitting certain milestones around profitability, or is it just easy stuff that they can do? We need to make sure there's symmetrical awards. And number eight is that the business sets goals for the long term. Of course, long term, you define yourself. Long term to me is at least 5 years, but the business should set goals for the long term. Number nine is that there's a broad focus on growth, and the board should focus on growth. And too many companies are focused on protecting what they have now. They're not interested in actually growing. They just want to keep what they have. That's not enough. You have to think bigger than that. So we want to see a broad focus on growth. And then lastly, the last one is that the value of the business is based on fundamentals. So whether it's sales, whether it's market share, it's margins, but the value of the business needs to be based on fundamentals. We are value investors. We care a lot about fundamentals. There are certain companies that we feel like we should buy. We see that they've done well, they've gone up. You know what usually happens though, right? They eventually come back down to earth, and we wouldn't have known when to sell. I would rather buy the company after careful analysis, and then I can sleep. I don't need to check the stock market every day. I don't need to check every week. I don't need to check every month. Think of it this way. Here in the US, we have Zillow as a website to look at houses and even look at your own house. If somebody has bought a house, many of them will go on Zillow and check it probably every 3 months, every year. They just want to get an estimate of the value of their house. Well, imagine if you treat your house like a stock, and then you go check it every day. Because the stock market allows you to look at it every single day.
Every single day, yeah.
Well, if you bought the house and you're going to live there, would you actually check Zillow every day to look at the value of your house? No. You're not about to sell a house anyway. I bought the house for the next 5 years or next 10 years. So you need to think of your stock the same way. I'm buying this house, this stock, for the long term. I will monitor it, right? If the house is about to get flooded or something happen, I probably should consider selling. I'm not crazy. Or the fire came through close. Now we reevaluate. So I look at our portfolio every 3 months. We reevaluate. If we hear something about a company, we need to double check, is it temporary or is it permanent, right? Warren Buffett looks at Wells Fargo and says, man, we just got into a lot of trouble for what we just did. Well, what Wells Fargo was doing. Is this temporary or is it permanent? If it's permanent, sell. If it's temporary, hold. In fact, might even buy more. And that's something that you learn as a business owner, as an entrepreneur. You understand that business actually goes up and down. Over time, it's going up and down, but to the right. But there are cycles. If you intend to hold a business for the long term, you ultimately will go through some things. That's just the life cycle of a business. But because you've been an operator, you've been an entrepreneur, not some analyst that has never started a business, never run a business, never grown a business, you know that the cycle is normal. So when somebody wants to sell your shares, you probably picking them up. You're buying. So I like to actually look at management purchases. Management sales are harder because people sell for different reasons. They might be on a schedule. Right. Jeff Bezos, for example, is on a schedule selling every month because he's funding Blue Origin, for example. You might have a death in the family you need to sell, or a taxable event you need to sell. So looking at management sales is less beneficial, but looking at management purchases, wow, why are they buying? Because they have information that we don't have.
That's true.
Right, that's not insider trading, but they know that, okay, well, I really betting on this thing. I'm doubling down. I'm buying some more, or it's cheap. Warren Buffett will buy back his stock up to a certain value. Why?
Right.
Who's selling to him? It must be somebody that is exiting. Hopefully it's because they have an estate issue, right? Somebody died, they need to sell the Berkshire A stock because it's huge and get some capital and probably buy some B. But in general, if he's buying, I think I should be buying or holding too.
No, holding too. That's true. That's true. Yeah, we actually do talk, and that's true. We do talk about that in terms of looking at if there's the principal, our top 10 shareholders, right, etc. If they're who's buying, if directors are, and that's very important too. If directors are investing in the company, shows their confidence in, because confidence, skin in the game.
Skin. That's exactly the term. Skin in the game. I want us to both have skin in the game, and I want you to have more skin in the game than me. I feel even better when you're doing that. So those things for me are really, really important when I am looking at building a portfolio or managing a portfolio. I'm not saying that's the only way. I keep telling everybody there are other ways to invest. This is the way that I have been taught, and that's the way I'm going to stick to it because it makes sense to me. I've seen it work. I've worked in low middle market private equity. I've worked with a hedge fund as well, and it was all based on that. So I'm not changing the recipe.
Good stuff, indeed. But I want to pick one thing out of the 10 that were given, and the one is, since management is the most important, and you actually, well, not the most important, but since management is a primary focus, is one of the primary focuses, and autocracy is something that is important. What are your feelings though on the fact of if the CEO is doing things that is not sending the company in the right direction, but still getting paid, etc.? How should an investor, what should an investor look out for with that? The board is supposed to hold the CEO accountable because they are beholden to the shareholders. What should we be looking
at? Is that true? That's what I'm going to ask. Is that true? If the CEO is a majority shareholder of the business, who does the board actually work for?
Yeah, good point. So that's the risk. So now how do we deal with that? How do we deal with that? That's now the risk that we are about to undertake.
So I like that. So I like protecting against, minimizing downside risk. So it's important, in my opinion, to think through this person. How do they think? How do they make the decisions? What is their decision-making framework? Is it a framework I agree with? Is it a framework I disagree with? Is it a framework I don't understand? Do I understand the business? If I understand the business, then I should be able to make a decision that this person is doing something wrong. Or sometimes you have to just trust, and this person actually is smarter than you. They know more about how that business makes money. If you don't have the stomach for it, though, you sell. That's the beauty of owning publicly traded companies. If this person make you uncomfortable, they send some tweet that make you uncomfortable, they send something that seems stupid, just sell the shares. That's all. If sell it and don't look back. Don't have this fear of, oh man, I sold at the wrong time. I should have held it for longer. Man, did he sell? Did he make a profit? Nice. Okay then. And he went and invest somewhere else? No problem. You do not need to own every single company that has done well. You don't need that. You need to minimize your losses. That's actually what you need to do. You need to minimize your losses. There are a lot of people who say, oh man, I bought at 100, it dropped to 70. When I get back to 100, I've recouped my money. No, the time value of money matters. It needs to go past 100 for it just to technically get back to zero if you actually understand time value of money. So for me, it's a simple decision. Again, framework. I go back to my framework. I'm not making a decision based on the emotion. The CEO might me vex. Okay, great. Let's go back to the framework. Let's look at the company and let's go through those 10 traits of great companies. Let's look at the fundamentals and decide, okay, well, do I still want to be a part of it or not? Make the decision and then move forward. I think indecision is actually dangerous. It's dangerous for your portfolio. It's dangerous for your own life. Don't be an indecisive investor. Make the decision, live with it, move forward. You can learn from it, whether you're stuck with it or sold, but it's liquid. Sell the shares. It's not a private equity deal that you're stuck with. And if it was a private equity deal, you would have enough power to fire the CEO. But before you had gone in, you should have known that the CEO had certain tendencies, and you would have been okay with those tendencies, or you chose to overlook them. Well, but that's on you. And that allows you to learn as an investor. You know what? I recognize that now. And our brains work via pattern recognition. Like, you ever drive home and you don't even remember how you get home?
Yes, that has happened.
Yeah, because our brains that's a shortcut. Our brains create shortcuts around pattern recognition. So the same way that you now have learned that, boy, that man burned me now. And when I invested. So when you hear certain words come out from this next CEO, it's like, ratted. That sounds familiar.
Very familiar. Yeah.
God.
Yeah. Now, the golden word was, as we always say, it's different this time. Which it's not different.
But I think this allows me to bring up a term that I've been talking about a lot. I spoke about it at the Opal Investment Conference 2 weeks ago. We grew up as value investors, or hearing about value investing. We now need to shift to values investing, and that's what ESG is doing, right? Values investing. I will not invest in companies that don't align with my values. So it's not just value, but value should matter. So when you talk about that CEO, well, if you can't go to the board meeting because you're not on the board, well, then you don't have a voice there. You go to the shareholder meeting, the annual general meeting, you now have a voice. But if you don't have enough votes, you can't do anything. Well, then sell. That's it. You have a voice by selling. You are able to actually walk out the room and leave and take your money and move on. If enough people do that, they actually will pay attention. And isn't that what BlackRock is doing? They're saying we're going to, try and divest from carbon-intensive industries. Or when a bank says we are not going to fund any more new coal-fired plants in America, they're voting with their dollars.
That's true. That's very true. And that's a good segue, I think, to go into to what you have learned in your lessons, as we say, in terms of values. From your hedge fund experience,
So working with a hedge fund was really interesting. A black-owned hedge fund based out of Naperville, Chicago. I opened their Miami office, and there was a long bias fund. So hedge fund is a misnomer, since we weren't hedging. We didn't short anything. The most important thing that I learned from Nolan Langford was pretty simple. Nolan believes in having a maximum amount of securities in his portfolio. And this is something that Warren Buffett talks about, Mike talks about as well. You don't want to have a massive portfolio. I think Peter Lynch says that you don't want to have 100 eggs in a bunch of nests. You want to have a few nests and then watch them like a hawk. It is easier to understand 50 companies or a smaller portfolio and know each of the companies and buy a basket of 100 or 250. It's impossible to know all of those companies and the management and what's happening. So we had an upper limit of 50 securities, not just stocks, right? Not just stocks, bonds. So you would buy stocks and bonds, the maximum was 50. And the way it would work, he got some software programs, thankfully, to make it easy to look at it. So here's the investment thesis, here's the fundamentals we're looking for, and then the software would run something every Friday night after the markets close. It would run analysis and then spit it out on a Saturday, and we'd look at it on Monday. And then if a company shows up in his top 10 for 3 months, it means that it showed up based on what he's looking for, right? His criteria.
Right.
Then he would assign it to an analyst to go and look at. Then what he would do is, okay, great. I already have 50 in my basket. This now looks interesting. Is it potentially better in terms of the return that we're looking at over the next, in his case, 2 years? Is this return better than any of the 50? If yes, he would sell his worst performer and then replace it. He would not add to the 50. He would replace the worst performer. I don't care how much you love the company, sell your worst performer and put this new one. That's what he would do. That was intense discipline. But here's the catch. if it was not better than any of the 50, the money he would have deployed, because we always have some cash, at least 10% in cash to take advantage of opportunities. Instead of buying the one that's not as good as the 50, he would take that money and put it into the best 5 companies in his business.
Okay. Nice.
And so we had a very good return the first year, which he would never. Nolan is the first one to say. He told everybody, I can't do this again. Right? We had like 127% return in the first 12 months. So, next year was a 61% return. And then third year was actually a negative return. And then it went up again. So there are temporary dislocations that can happen. But for me, that was a good reminder of discipline. And I took that into my personal life as well as entrepreneurship life, right? I can only do a certain amount of things. So on the family side, 5 things in the personal side: boards, time with family, hobbies, and then 3 things on the business side. I cannot stretch myself thin, my time thin, my capital too thin. And that's the same reason and same way we've approached our portfolio. My personal portfolio, which I don't really have much because all of the money gone into Blue Moho. I don't know. But Blue Moho's portfolio, it has taken the same approach, and it's been very helpful because we get to go very deep with those companies and learn them and know them inside out, know management inside out. And
right. Oh, you're gonna mute. Sorry. One second, guys. Not yet. No, not yet. Oh, take it off mute. Nope. Hasn't come off, is it? There we go. Yep.
All right. Let me. So that's the right Bluetooth headset just died.
Yes, I recognize.
I can cut it this one. Yeah. The computer. All right, perfect. I hear you guys. So see, that's why I didn't wear both ears. So focus on having a concentrated portfolio, and our goal, hopefully one day we'll launch an exchange traded fund, and it's not a Jamaica ETF. I'm just being clear, guys. That's not. We can't launch one. Just be clear. That's not what we're launching. But I would love to do an ETF that covers US companies and taking the same approach that we have been building our Jamaica portfolio. I would love to get to that one day. So maybe we get there.
There's a book actually that I read, and there's always a book that follows that. About that. But it seems similar. The little book that it still beats the markets. I have the updated version.
Yeah, man. Yes. I know that book.
Yeah, of putting together the basket of stock, and then you take out the worst one after the whole 5-year period. That's
interesting. So it's funny if you're investing over a long period of time, that's not necessarily in my opinion, that's not necessarily the best way to generate returns. I would actually look at the portfolio over 6 months, 9 months, a year, and say, okay, what were my worst performers, and then try to understand why. Because my years are very short time in the life cycle of a company. So, for example, if you looked at companies right now and said, "Oh man, they perform really bad," well, COVID affected a lot of companies. You wouldn't just take out the worst performers. You're actually going to miss out on some of the upsides. So I actually doubled down. If I really like the company, if it's down, we go back in and say, was our analysis wrong? If our analysis, in our opinion, wasn't wrong, our analysis was correct, it was right, and you know what I need to do? I need to buy more while it's down.
Yeah.
I actually would look at my worst performers and consider, should I buy more?
Yeah, we need to just do one thing. The other headset is actually giving some feedback, so I'm not sure if it's fully connected to the computer properly.
Right. Hold on.
Yeah.
How about I turn off the headset and I just talk to you through the computer?
It's actually very clear. It's very
clear. Okay. I didn't want to have any issues in here because the office. Well, I guess I won't have any echoes in here. It's fine.
No, it's just fine. We're hearing you very clearly.
As long as you guys are all right with it.
Yeah. So the next thing then, because you had touched it earlier on, but in your view, in terms of where things are heading and our path forward, tell us some more for the new way of investing, which is going to be the whole rise of ESG, which is that environment, social and political. Corporate governance, and impact investing, what do we need to know, and what should we be looking out for going into the future with this?
Right. Well, so I would say I wouldn't call it a new way of investing. If you are a value investor, you always are looked at fundamentals of the company. You looked at potential threats or competition, where it's going. So we have never priced in carbon, for example. That is something that's an externality that was never priced in. Well, now we need to start actually pricing it in. Climate change is a risk. Well, whenever you're looking at investments, you factor in risk, right? We look at risk factors for that company. So it's not a new way of investing. We're just acknowledging additional risks that we didn't think about as risks before. And so ESG is one way of kind, environmental, social, and governance. You look at the governance of the company, or you want to make sure that they have their diversity. How are they treating, whether it's the customers, the board diversity, the management team? Social issues is something that we care about, right? Are they donating money to politicians who are passing laws that are racist, for example? But we did this in the past. We had Jamaica actually led the whole anti-apartheid movement, right? Jamaica was one of the first, I think it was the first country to get up and say, we're not doing business with South Africa because of our, but then it led to more people divesting. So that actually happened. ESG was a thing before we called it ESG. Certainly impact investing, aka sustainable investing, is something that we have not looked at in the past. We didn't factor in stakeholders. All we cared about was shareholders. But it used to be that we cared about stakeholders. It's Milton Friedman that came along in the 50s and 60s that kind of messed it up. That whole Chicago School of Economics, where they didn't care about Milton Friedman would just say, hey, if you're a company that can dump toxic waste in the river and save money to make more money for your shareholders, then you should do it. Because all that matters is shareholder primacy. That's all that should matter. Well, I think we could go and ask an 8-year-old if that makes sense. And they'd say, no, we need to don't. We can't do that. So we are simply going back to how it used to be, where stakeholders matter, not just shareholders.
Okay.
I think we're getting past Milton Friedman and what he did, and that led into the Reagan years and the Margaret Thatcher years. So I think we're going back to how it used to be, where we cared more about the impact. Okay, how many people are we getting hired? What were we paying them? Are they able to live comfortably and then have this multiplier effect? Right? We had Henry Ford go and pay his workers, I think like 3 times what everybody else was paying them to build cars. Right? That was before Milton Friedman. Milton Friedman would say he's crazy to have done that, but he was smart to have done that. He did that, and then his workers were able to also buy the products they were making. How is that a bad thing? Walmart turns around, Amazon turns around and pays $15 an hour. Or $12 an hour. That's good. The people have more money to go and spend, which then has a multiplier effect within the community.
In the economy. Yep.
Exactly. And we need to remember that not all spending is inflationary. And I think we're all wondering about that going forward. We're testing the limits of that theory. Inflation and printing. But I don't think it's a new way of investing. I think we're simply looking at new risk factors that we now realize are actually risk factors. There was some denial, but the United States is the only country in the world that seems to be arguing whether or not climate change is actually real. I don't think there's a person on an island in the Caribbean that's arguing that it's not real. Like, hello, we can literally sit at the beach at Hellshire disappear. Don't tell me it's not real.
Very true. Very true. So with that, actually, then we talked and we spoke about it briefly with the 4th Industrial Revolution and the future and the way forward. So clearly, we've seen. We've always been talking about digital. Everybody has been using computers. This now in my hand is apparently the new dispensation going forward. What do you see? Because there's so much out now, and I don't want to even mention it in that way, because people always take it into an investing thing. But certain things cannot be denied that are going to be digital disruptors, specifically in the financial markets, in terms of how we do transactions, in how corruption actually is handled based on those technologies being incorporated in businesses, in politics, etc., and so forth. I was recently, today actually, I sat and listened to a launch of a particular blockchain for the Africa hemisphere, or the African continent, sorry. And 5 countries starting in, and 25 is who they hope to move out to. And it was such a well put together presentation around the 4 IR, because it dealt with, first and foremost, they talked about the main part is that we need to connect the unconnected. That was the first. The second one was, once we connect the unconnected, then we can speak about banking the unbanked. And then the third part was creating equity, not equality, because that's coming naturally, but equity that comes behind it in terms of everybody, not just having access to being able to take themselves out, but also being able to propel themselves forward, equitably. So with that being said, and as an investor going forward in the future, how should we be viewing that? Where should we really be looking in terms of companies that make that sense that they will pivot or
So I can't tell you specific companies, but I can.
No, right? Yes, of course.
Talking about industry, strong long-term growth industry. So I actually did this presentation 2 years ago. I did a presentation for Jamaica Computer Society downtown at the Jamaica Conference Center, and I put a slide on there. I put up a simple picture, and I said this was the first print ad for a washing machine, an electric washing machine. And I said to him, look closely at this wire, and you follow a wire from the washing machine, and it goes into the light bulb socket. It wasn't plugged in the wall, it was plugged in the light bulb socket. So I said, electric lighting was invented to replace kerosene lamps. That was literally what it was, to replace kerosene lamps. And that's all they ever thought electricity was good for. It's going to replace kerosene lamps. Yay, that's it. And then somebody decided, I can invent appliances that can be plugged into it. So let's screw out the light bulb and screw in the socket. I honestly don't know what would happen. Well, we know what would happen. It must have had a lot of debts, right? You don't finish washing using the machine, and then you go and unscrew the thing to go and put the light bulb in there. That just seemed dangerous. But that's actually how it started. Somebody eventually put a socket down below and started saying, wow, electricity is transformative, and we can plug into it. Things that we never thought could be invented were then invented. It had one purpose. So you think about the same way, the internet is a transformative platform. The internet was literally designed so we didn't have to fax papers back to each other. It was email. We couldn't predict that we were going to have voice over IP, that we're going to be doing this show right now, that we could watch movies online, watch TV shows, that we could do banking online, pay our bills. So we really cannot fathom what more can come. We're now seeing the Internet of Things. So you have to think of the internet as being very transformative. But something else that was transformative that we didn't think about was the car, right? The automobile, going from horse and buggies, which Steve Jobs would say, if you had asked somebody back then what they wanted, they just want a faster horse. Well, no, don't ask them what they want. You need to build it and get them to understand. So Henry Ford goes and does a Model T, figures out how to produce these cars and mass produce them, and turns around and makes it affordable. Well, because the cars became affordable, they needed better roads for the cars. So some people are complaining, the horse and buggy guys losing jobs. The horse drivers losing jobs. They gotta go behind the horse and clean up the manure, losing jobs. But there are new jobs being created that we don't even know what these jobs are going to be. So because we had cars, we needed to have better roads. Because we had roads, the car could go further. Well, if I'm going to drive somewhere, I need somewhere to stay. So then we had hospitality that sprung up. We had inns. Well, if I have an inn, I have a hotel, what am I going to do when I go there? So it created tourism because we had cars and we could now travel further. Then you had travel agents, and that literally built an entire set of industries we could not have predicted. So we really don't know what else is going to come. Whatever we can see is the tip of the iceberg. There's so much more that's going to be invented that we just cannot, our brains can't process what else can come from this. But what I can tell you is this: you look at simple long-term trends. Number one, this is going to be the largest wealth transfer in history, from baby boomers to millennials. Largest wealth transfer in history, that's number one. But number two is 50% will be inherited by women, by females, and women invest differently than men. So largest wealth transfer in history, and for the first time in history, is going to 50% women. So that's going to be transformational. I think that's going to be very different. Another thing that we need to look at is age. We're living longer. Baby boomers are going to live longer. I think like 10 million a year are retiring as well. But if you're going to live longer, it means that we're going to have a higher incidence of NCDs, for example, non-communicable disease, diabetes, and so on. It means we're going to have cancer. When you look at something like CRISPR, right? My bachelor's, I have a bachelor's degree, Bachelor of Science in Biology, minor in Chemistry and Religion. And I focus on genetics. I care a lot about CRISPR, and that's why we're able to create vaccines so quickly. Thanks to CRISPR. Before we had CRISPR, we could not create vaccines in 1 year. It just couldn't happen. Well, if CRISPR can be used to treat genetic disorders, if CRISPR can be used to create targeted therapies, gene therapies, we can also do targeted cancer treatment. Right? If you do cancer treatment right now, it's chemotherapy, man. You're burning the stuff. It's not targeted. You're killing healthy cells and the bad cells as well. And that's the way it's been done for like 50, 60 years. It's right for innovation. So I think that's going to be big. Healthcare around older people is going to be huge. These older people also want to be taken care of. Like somebody has to take care of them. And we all working. We young people, we need both of us to be working. We can't retire to go take care of mom and dad. It can't work. Who is going to take care of these people? So elder care clearly is going to be a huge opportunity. Are you there?
Yeah, man.
Just been a while ago. So elder care is going to be a huge opportunity. We need to look at the fact that the human population is not slowing down. We are going to hit 11 billion people. There's no way we can change it. That's the math shows that we're going to 11 billion. And then that's where we're going to be. Where are those people going to be? Southeast Asia, Sub-Saharan Africa, some Latin America. Because that's where the growth rates are, right? We don't even have replacement population in Japan or Europe, and the US is falling as well. Birth rates are falling. But if they're going to be having new people in the most challenged places, let's call it that, economically challenged places, means that we need to sell stuff at lower cost. We're going to have stress on
and produce at lower cost.
So that's an opportunity that we need to be looking at. And so when you talk about the unbanked, it's important for financial inclusion. It's important to support women in business. We need to worry about water scarcity because that's a thing. We're pumping out too much water from the aquifers. Those things do matter. But as we add those people, guess what? We're going to have an issue with energy. And we haven't replaced, with decarbonizing the economy, we haven't replaced it. Climate change is happening. We're going to raise by 1.6 degrees Celsius. Okay, well, does that mean that we can grow bananas in Canada now? And we can't grow them here? Does it mean we can't go outside when it's summer near the equator? That's happening. Those are long-term trends, and we need to look at those. That means that technology has to be invented to deal with it, right? So I think those are going to be huge opportunities. I can't pick the individual companies. I still don't know who is going to win the electric vehicle race. I love asking everybody when they tell me which one to buy. I was like, oh, you know that. Tell me how many car companies existed in 1920 or in 1915 or in 1910. I mean, we're talking about 200 plus companies in America, 200 plus car companies back in like 1950, 1920. And now all we know is Chevrolet, Ford, Pontiac, and most of them were all merged together. So you literally can't pick the winner when you're just getting into it. And we're just getting into 4 IR. But we know the industries that are going to be strong long-term growth industries. So we need to pick some horses. I think you need to pick more than one. Or pick the one that is most advanced and generating revenue. I want to be very clear. Generating revenue and preferably generating profit with good management in place. Don't just and the guy that does the best marketing or the person with the most hype. And you guys probably know who I'm talking about, but I'm not saying those things are obvious, right? Electric vehicles are definitely going to replace, ICE vehicles, internal combustion engine. That's just obvious. The cost of producing solar panels has been falling like crazy. This is just like how the cost of computer. It's scary, I asked a young person the other day. It's like a 17-year-old talking about flat screen TV. And I said, you know how much a flat screen TV used to cost? And they're like, no. I was like, did a flat screen TV even exist 30 years ago? They don't know. I was like, no. But if I wanted to buy a flat screen TV 20 years ago, I'm spending all $5,000. The first version costs a ridiculous amount of money. And then the cost goes down, as we know, because we produce it more and we get better. So there's some stuff right now that's super expensive, but I think that cost will come down. The cost to sequence the first human DNA, I think it was back in like 2000, 2001. like a couple $1 million to spend. No, $1,000 to sequence your DNA. That price is going to go down. Well, what happens when I can sequence your DNA for $100? How can I help you from a medical standpoint?
That's true. Yeah. Actually, on that point, in truth, and a joke for you, I'll actually look back in my Amazon cart at an order that I bought years ago, and it was a hard drive. And the amount that I paid for that hard drive, I think it was only like 150 gigs. And the amount that I paid for that hard drive. No, when I'm looking back at what I could get for that same amount, no, it's just
it's
mind-blowing.
So I was in Atlanta 2 weeks ago, and they took me on a tour of the Computer Museum of America.
Yeah, I saw that.
Again.
Yeah, I saw that.
And they carried me back to a supercomputer. It was so funny. They're like, all right, this supercomputer came out 20 years ago, and it cost $85 million US. It's like a crazy supercomputer. I've never seen one in person. So I'm amazed at this thing. And then we Google it. The person Googles to explain to us how much memory it has. And I was like, processing power. And I was like, okay, so for example, it could do like, I think it was 13 gigaflops or something. And I said, okay, check on the chip in your iPhone 12. I have an iPhone 12 Pro, and it's like, oh, it's like 13 teraflops. The thing is, the phone in your hand is like 1,000 times more powerful than the supercomputer that we had 20 years ago. If you are born today or in this generation, you have to realize how lucky you are. How lucky you are to born now. I mean, it was so funny, you guys gonna laugh at this one. So my chief operating officer, Aurelia Cruz, Aurelia is older than me. Most of the people on the team are actually older than me. And so she looked at me in the car and she asked me a question. She's like, by the way, did you have internet when you were going to college?
Oh boy.
I was like, hold on. I'm trying to figure out, are you realizing that you're dating yourself, or you think that I'm that old? Which one? I don't know if I'm supposed to laugh at you or supposed to be like, yo, wait, should I be upset with you? And she's like, no, seriously. I was like, well, I started in 1996. So yes, I did have internet. She's like, oh, but you had like old internet. I was like, yeah, it was like gray and the links were blue. And when I clicked them, they turned pink. It was old internet, but it was internet. I was like, why? And she's like, well, I had a typewriter. And to me, the most awesome, when I got the typewriter where I could like the backspace, it could erase. I was like, I don't even know what you're talking about. I had a typewriter.
I see that.
But you grow up and you just say, hey, Siri. And you just ask a question and Siri just tell you. Alexa, these things are amazing. You really don't know what's going to come next to that. Man, we saw a company yesterday. So the mayor in Miami, as we all know, tweeted. He loved tweeting. So he tweeted that, this is the start of Miami Tech Week. Come meet up at 9 a.m. at City Hall. I met a group there that's wearing these shirts. So we talked to these two entrepreneurs. What are they doing? Originally from Venezuela, but grew up in Miami. Bootstrapping right now, but their business is a robotics company. I was like, cool. What problem are you trying to solve with your robotics company? Oh, well, packages are coming into the buildings. And instead of you having to come down to get the package, the robot takes the package to your door, your apartment. I was like, backside. I never thought about that. The robot is going to collect a package and bring it to you rather than you going down the stairs or the elevator. I just have it.
The elevator, everything.
Everything. The robot is doing that. But then you think about it, and I remember there were some videos of people in China, COVID quarantine, and it's a robot bringing them stuff. The robot bring them food. Like, that makes sense. Why would I do room service and a person brings the food at the hotel? No, the robot can bring the thing, man. I just order on the app. Robot show up and bring it, right? We've seen robots driving around. I've seen them here in Brickell. A little robot was driving. It's like, what is this? It's a DoorDash robot with the food.
Yeah, bringing the food. Yeah, I know. Yeah, I saw that.
Come on. Yeah, cars are going to drive themselves. Let's be honest. Why would you buy a car in 10 years' time? Why are you going to buy a car, drive it to work? If we even drive into work, let's assume we're still going to work and we're not all working from home or working from the beach, right? You drive to the office or you drive to the supermarket, you park the car at work. What the car do? It sit there for 8 hours. You do some stuff with it for a few hours and you go home and park it at home again for another 8 hours. Really? Why are you going to spend money on that? No. I'm going to drive the car to work, or at least the car drive me to work, drops me off, and goes out and does stuff. Like, go out and make some money for me, man. Go pick up some people, drop them off, pick up some packages, drop off the packages. Go make some money, become a profit center. That's going to happen. And the cars are going to need to talk to each other. That's how we reduce accidents. I think that's going to happen. I don't need to watch anime to know that. I don't need to watch a science fiction movie to know that. It's obvious, right?
True. Very, very, very true. Very true. I think that the only challenge everybody is having is loss of jobs. And I was looking at World Economic Forum today with the 4IR, and that was one of the biggest things. But the persons that were in the video spoke about repurposing those persons, and that's the big challenge though. Repurposing them now for the information age. Right. Those who are not they're not, but how can we quickly train them to know, be repurposed, to move off of the industrial line and become technicians skilled in that manner to fix the machines.
Ultimately, we don't have to repurpose everybody to do that. Everybody doesn't need to do tech and be in a STEM field, right? Let's think about this. You're an elderly person right now. Would you want a robot to come and take care of you, or you want a human to come and take care of you?
Given that's going to be that you want a human to come and right.
I think they're already afraid of the robot, man. Like we
have seen it. For those who have seen iRobot, etc.
Yeah, exactly. Like they're not having that robot come, and they want a person. So you can repurpose people to help actually be elderly companions. That's pretty much what you do in Japan and so on. So everybody doesn't have to be tech and learn how to fix a robot and program AI and deal with machine learning. No, but we have to remember again, I'm literally not worried about job losses because new types of jobs are going to be created that we have no clue what is going to be built. Everybody that was screaming at, the horse and buggy whip makers and the driver of the horse carriage going to lose their job because of this car, right? The car was a horseless carriage. It's costing jobs. Well, you remember we call these people like Luddites? That's literally what they were called.
Yeah.
Created all these jobs we never thought about. Highway construction, highway maintenance, road have to pave, road have to paint.
That's true. There's always something. If you
came out of that, so we can't say that it would cost job, right? The airplane came and we stopped using steamships across the ocean. All these sailors lose their job. All the steamship people lose their job. The shipbuilders lose their jobs. Really? Okay. Didn't we actually have more jobs now though than before? We have more jobs. We have a better economy. Our living standards have increased. Our parents grew up with TV and all the stuff we have for the price we have. Oh man, I think our parents jealous. Right? When you got a color TV, it was like, oh geez, we have color TV. One color TV in the neighborhood, man, and them all. Somebody, it was funny. The person that gave me the tour, the computer museum, was saying that she never forgot the day. Well, her husband was saying he didn't forget the day of the moon landing because one person in the entire neighborhood, this is in America, one person in the entire neighborhood had a color TV. So the whole street came to that one house. 13-inch TV to watch everybody to come and watch them and walking on the moon. And I'm just like, damn. No, man. We never talk about it. We're going to change. Jobs will come. Don't worry about that. What we need to make sure is that the people who unfortunately get left behind from a skills trade, because not everybody is going to adapt. And we saw that happen with the computer age. Not everybody adapted from typewriter to computer, using mouse, internet banking, and so on. We need to make sure that we design things in an inclusive way, not an exclusive way. Because the people who don't get retrained and get left behind are the ones who then come out and storm the gates, basically. You need to take care of them. But that's where social safety nets matter. That's where good investments for social safety nets matter. Let them retire. And let them teach. Let them provide knowledge in some way. Because there's knowledge that they have that's useful. You don't have to do everything with your hands. But your brain still work fine. There are things I could teach. I could teach us history. That's one thing that could.
Indeed.
Let's find ways for them to feel useful, and that's important. I think all of us as humans want to do something so that it's strange. I am convinced that humans are the only species of animals that actually get value from doing something, not just by being here, but we have to do something to feel valuable. This is my job. Yeah, like we want to do something versus just sit down and rest. Like I don't think the mouse is going around saying, "Oh man, I get the value from chasing this thing or from building this, digging this hole." I'm just there. I don't care.
Yeah, we cherish or we treasure being productive. Productivity
is our thing versus, we need to actually learn to rest though. We need to learn to rest and recharge. We need to cherish resting and recuperating as much as we cherish productivity and efficiency. So, but that's us. We don't like to learn from nature, which is it's always my thing. At everybody have a bachelor's degree in biology. So look at humans. Humans are full of hubris. So instead of saying, hey, let me learn from a leaf and how it turns sunlight into energy without wasting it, we go off and say, let's just dig up this thing called oil that's permanent, that's finite, and we're going to burn it. Really? That's not what nature did. No, we went back and looked at the leaf and said, oh, photosynthesis. Well, we could do solar panels and replicate it. And then we went and do it. Instead of saying, hey, we need to keep our buildings cool, let's learn from a termite and a termite mound, we went and invented AC. And they put stuff like Freon in there that end up killing us, right? So we, for some reason, don't like to look at nature to give us ideas. We like to think that we're smarter than nature and we can do it ourselves. And then later on realize that, there was actually a better way to do that. Let's replicate that, right? Spider webs. Let's talk about spider webs and how strong a spider web is. Have we invented any material as strong as a spider web yet? No. Let's
point. Excellent point indeed to think on it. Think smarter, not harder, or work smarter, not harder.
Work smarter, not harder.
Yeah. Well, this has been excellent, David. Thank you so much. I have Jeremy jump back in. We got a few questions that we want to take. I have a few questions actually that I'm going to throw for you.
Man.
Jeremy. So, Jeremy, we can't hear you. Nope. Jeremy, we can't hear you. Yeah. Not yet.
Oh man. I'm curious the questions you guys.
Still not yet. You go ahead. All right. So until Jeremy comes back in. So you are a publisher. Until I get those questions, you have been published. You've done a few books. Your most recent one I enjoyed. That I read. Well, that's the one I got and I read.
Which one is that?
The Things Entrepreneurs.
Actually, okay, thank you. I appreciate it. Okay.
Yeah, so I was going to, I know, and I like the structure of how the book was done in terms of the different levels that it's not just applicable to entrepreneurs, but persons in general, investing, life, what they go through, doubt, success, hubris, as we spoke about, being humility, finding value, purpose, etc. So, and there are a couple of them, there's so many, but there are a couple of them that I pulled up because I wanted to know what was your thought process. And for the audience, the book Things Entrepreneurs Say was done by David because he stated that he's seen many a quote, which we all see. We see all these quotes in the world from different persons. And there's never been a book that was put together about it. So we just see them popping up. So he decided he'd do a book. So himself, his brother, and I cannot remember the third person, but it was that you three collaborated together.
My friend Troy, right. My wife designed the cover.
Right. Yeah. So I picked out a couple of them. I wanted to ask around that. What made you pick it, and what impact did it have on you? So the first one that I have for you is risk more than others think is safe. Dream more than others think is practical, by Howard Schultz. What was the pick on that one? And what was going on?
Right. Well, so obviously, that's the founder of Starbucks, or the person who took over Starbucks and really grew. He didn't found Starbucks, but he took it over and scaled the hell out of it. And so for me, as an entrepreneur and someone who grew up in Jamaica, where for the most part people didn't push for you to do entrepreneurship, they wanted you to take the safe route. Go to school, get good grades, graduate, get a job, 9 to 5, work for the next 35 years, 40 years, retire, take no risk. And I felt like it was the opposite in the United States, especially. And so that one was a reminder to me that I can't listen to the people who are not willing to take risk. If you want to be average, then you do what everybody else does. You think of a normal distribution, 80% is in the middle, 10% on the bottom, 10% on the top. Why am I listening to the 80% if I want to be in the 10%? If I want to be a great football player, I can't listen to the 80% of players. I need to study the top 10% and listen to those who are pushing you to be great. So that's what that was for me, is risk more than others are willing to risk, because you want to do better than others. And I want to then create generational wealth to pass on to my family, right? I think the best thing as a parent is ensure that your children live better than you. And
That's true.
And that your children are better than you. So not just live better, not just materialistically live better, but actually live as people better. So your children should be, kinder than you, nicer than you, more charitable than you, nicer human beings than you, because you have made some mistakes and passed on. But where you have to take some risk if you want to create generational wealth. And I was very focused on being an entrepreneur. If you're going to be an entrepreneur, you might as well shoot for the stars. Right? Dad used to say, shoot for the stars, you fall short, still in orbit. I hit everybody. If I aim this high, then that's where I'm going to go. If I aim this high and fall short, I still ahead everybody else who was aiming here though. So let's aim big. Why not?
Indeed. So the next one I have is all right. So this one I think, and I recognize that, as you said in the book, if you saw somebody mentioned more than once, that's more than likely your favorite, one of your favorites. So
let me see who this one is.
This one is. I'm not even gonna tell you who it is. So let me see if you can remember.
Oh no.
So when you're first thinking through an idea, it's important not to get bogged down in complexity. Thinking simply and clearly is hard to do.
Yeah, Steve Jobs?
Nope.
No, it's not Steve Jobs.
It's somebody that, and you mentioned that person. You had quotes from that person multiple times. No, it wasn't.
Jesus, we can tell I don't study all of the quotes. Those are my two favorite people for quotes. So
Richard Branson. Yes, it was Richard Branson.
So you can pick out. So I have 5 role models that I have. So those are 3 of the role models. So yeah, and Richard Branson was the first person that I looked at as a role model. So yeah. So you're asking why put that quote in there about?
Yeah, why that specific one?
Well, I mean, I'm sure I might have had with Steve Jobs in there around simplicity as well. People misunderstand what simple means. Simple doesn't mean easy. It's actually harder to make something simple. So I feel that simplicity is actually important. If you can focus on making something simple, explaining something simply to someone means you actually understand it. If you can come up with a simple approach to wealth creation or a simple approach to life, to a relationship, it makes it easier. You develop a framework. It's easier to understand. It's easier to pass on. But keeping it simple is actually the hardest thing that you could possibly do. And I really like doing hard things. I probably shouldn't do this to myself too often, but I like a challenge. But that's the challenge. Can I explain this simply? Right? I've had that challenge with Blue Moho. Can I simplify the explanation? Can I simplify my drive? Why? What's my why? How simply can I explain that?
Indeed. Okay, good stuff. Right, let me see. I'm gonna pick. This is another random. I'm going out of the line that I went in. So, what happened that chose this one? There are no right decisions. There are consequences to every choice. All you can do is choose to go all in and brace yourself for the inevitable roller coaster called success. Alicia Darby.
Yeah, so that's somebody actually sent me that one. So this book was a collection, as it says in there, of quotes from well-known and not so well-known people. So I'd put out this call via this website and gotten about 164 or so quotes from people I didn't know. And then I weeded through that to then pick some of these that resonated. So this was one that really resonated with me. And I'll repeat it again for the people.
It says again, there are no right decisions. There are consequences to every choice. All you can do is choose to go all in and brace yourself for the inevitable roller coaster called success.
Right. And so that was something that really hit me hard because we grew up in traditional school, in the traditional education setting, saying that you're right or you're wrong. Right. I get a grade, I fill out the question and put the answer in there, and it's typically right or wrong. It's just black and white. And I think that's an unfortunate way to then continue with life. There are certain things that are right and that are wrong. It's just obvious, like it's wrong to go and commit murder, for example. But killing is not necessarily wrong or right. There's context that has to be there. We tend to want to focus on making the right decision. And so we spend so much time, we get into analysis paralysis. I think it's more important to understand that it's not that it's a right or a wrong decision. You actually need to just make a decision, right? You evaluate it. You don't need 100% confidence. Make decision, but understand that there are consequences because we beat ourselves up. Whether it's we got with somebody and then it break up, or we say it was a wrong decision to get with that person. But that's not necessarily true. You are here today, you're smarter, or you're a better spouse or whatever because you had that happen. The same way that you're an entrepreneur, you made a decision within the business. You're now a smarter entrepreneur. You cannot get it right all the time. Start with that. You don't need to get it right all the time. You need to learn from the mistakes that you've made. You need to learn from the mistakes of others, and you get smarter over time. And we instinctively know this, though, when we're kids. It seems to get pushed out of us as we get older and go through school, where they keep focusing on being right. And we celebrate the person who gets the most right. What we need to celebrate is the person who learns the most about their consequences, right? The most improved is what actually matters, not the person who always gets it right. The person who thinks they're always right, you know what? It's the worst boss you can have, you know? It's the worst boss you can have, let's be honest. No, I need a person who understands that they're not always right. They don't need to be right, but they want to make forward movement. They can stop, evaluate, what did I learn? What was the consequence of doing this? And that's something that ultimately is like chess, right? We need to be able to think, if I do this, what are the consequences of doing this decision? What are the consequences of making that decision? And play it out in your head. But you do that after having lessons, right? I get on the bicycle, I fall off, or I try to walk. Right. And so you learn from it. As kids, that's how we learn. We learn by making mistakes and understanding the consequences. I mean, I have 3 children, right? 9, 7, and 3. Thankfully, none of them have made the mistake I've made yet, where, mommy said, the stove is hot, and there's something hot on there. Don't touch it.
And get burnt. Yeah.
I didn't put my hand in it, right? I go and flip over the blinking pan and spill the gravy and burn like a nice little V shape down my chest. And I have to get rushed and put in cold water. I definitely learned my lesson after that. That you don't want them to have to learn that way, but that's exactly what happens as kids. We tend not to listen, and even as adults sometimes we don't listen, and then like, I told you so. But that's the thing, we instinctively learn by actually doing something, suffering a consequence, whether it's good or bad. We might invest and then we learn because it did well, but then we need to understand why the investment works. And it's easier to understand why it didn't work. We definitely can. Hindsight is always 20/20. Understanding it did work is tough, but make the decision and then have progress. But don't think that you should only go forward. I've seen this quote in the past. I don't think I put it in the book because saying that you just need to just put one foot in front of you every day and make progress. As long as you're making progress, that's good. Now, I disagree. Now, at some point, you need to stop and evaluate. Am I making progress in the right direction? Because you could actually be going in the wrong direction. Or guess what? A precipice is right here. So you want me to still put one foot in front?
Foot in and fall off, yeah.
Let me stop and turn around. I should be allowed to stop, reevaluate where I am, and say, no, it's the wrong direction. Let's turn. Or this led me to a dead end. I can go back and do something else. Right? And that's ultimately, that's career paths for a lot of people. That's life paths for a lot of people. You are allowed to change your mind. You're allowed to make a different decision because you learned from the consequences.
Jeremy, you back now? We can hear you now. Try again.
I hope so. Can you hear me?
Yeah. You're back.
You're definitely not getting any of the
collective. Oh my gosh.
You can't come. The one time you have me on, you can have technical difficulties, man.
Oh my gosh. I'm so glad that we're tag teaming with Chika here, because normally it's one of us hosting, and I'm like,
you know what? That's when they wouldn't have had any problems. If it was just one of you, that's all right. That's actually why it happened. Because you put in place a contingency plan, right? You had a plan B. Guess what? They had to activate the plan B.
Okay, interesting. Sounds like a concentration strategy, Chike.
All right. Yeah, whatever. We're always back and forth with this.
I'm going to use that to talk about entrepreneurship, right? I remember when I was talking to the first investor I ever spoke, like serious investor, an angel investor here in Miami with Real Vibes. And he asked if we have any other jobs or any other plans. And I said, yeah, we're doing our MBA and so on. And he's like, oh, well, then it means you don't have conviction in what you do. I said, what do you mean don't have conviction? We need to make sure we have a plan B. We have a degree to fall back on. And he's like, yeah, well, if you have a plan B, it means you're going to use it. I needed to have only plan A. It has to work. And so that's the idea of, we've heard this in well, it's not even Greek mythology, in Greek history, right? You show up, was it the Spartans? Well, no, the Spartans don't have boats, but I think his Azen's got to go fight and them show up in the boats, reach
burn
there,
them,
burn the boats,
burn them,
burn the
They have
boats.
to win.
Guys, you have
Have
no
to win.
option but to win, man. Sometimes you actually have to do that. Don't burn your emergency fund, please. And you know what else? Don't do this one. I'll leave in this very important tip, guys. Do not raise the money for the business. Start paying yourself. But when you pay yourself, you take your money and put it back into the business and have no emergency fund. Then you're telling yourself, oh, the best return I can get is in the business. So yes, I paid myself a salary, but I'm going to put my salary back into the business.
Yeah.
Oh, man. Basket. It's the worst mistake I ever made in my entire life. Like,
guilty. I'm guilty of that.
All of us are guilty. All of us. But we learned consequences. We got smart. And then we can share it with somebody else and have them avoid our mistakes, make some new mistakes, and teach new mistakes that they make as well. I love that.
Definitely. All right, man. There's so much to take away from what you said, David. It's you definitely delivered on what you promised us. I'll just say that, right off the bat. We have a few.
I can do a lot more next time when the SEC stuff won't be an issue.
Yeah.
That's the questions. Let's see if I have to say no comment, right?
Well, let's see. Well, I definitely know that I got a no comment question. I just told the person that you won't be able to cover it, so that's definitely one already. We have Dorian Gordon Williams asking, how can one overcome low risk tolerance when they have decided on an investment?
Oh, geez, and that's actually Doreen. I know her. She did tell me she was jumping on.
Sorry, I apologize, Doreen.
Yeah, man, overcome low risk tolerance once you've made an investment.
Once you've decided on an investment. So you have a low risk tolerance, you've decided on an investment. I'm guessing she may be asking because sometimes depending on the investment, there may be volatility, but you've made the decision.
That's a big one. So for me, think of it like a house. Always go back. Why did I buy this stock or buy this house or buy this car? Why? Is the why still valid? Right? That's a thesis. If it's still valid, okay, that's great. But if you do it over time, if you keep buying things, then it means that you're going to build this habit and you're going to actually increase your risk tolerance because you'll get used to volatility. You build up that iron stomach. You're not born with that stomach. Let's be honest. You have to build up that tolerance. So do it over time. And if you see it dip and you believe that your why is still there, the reason is still there, buy some more then. Buy some more. Right? Nothing cures low risk tolerance than actually seeing gains. I'll be honest. And if you buy the dip, you're most likely going to over time and you're going to be like, now I feel better. Should I buy more?
Yep. Again, you say hindsight is 2020. There's this one thing I always say to the group: if you don't have enough conviction to sell the stock, why wouldn't you buy more? Because if you're not gonna sell it, if you're holding on to it, why not add more and dollar cost average down?
Oh, exactly.
I say that all the time. Yeah.
Yep. I love that.
We have Tiana who is asking, who are the key players that you have on your team as a new entrepreneur? Who are the key players that you should have on your team as a new entrepreneur? Okay.
So I like that. So obviously, most important is the advisory board. You need to learn from other people who've been there, done that, and made mistakes, so you don't repeat their mistakes. So build an advisory board, and that doesn't necessarily require giving them equity either. You probably give up 1%, 2%, but build an advisory board. That's the first thing, and they need to cover certain skill sets. So whether it's finance, marketing and PR, governance. But build a board that fits in with what you need. You might need technical assistance, but build the advisory board. That's one. But number two, you need somebody who's going to be good at PR, marketing, and somebody who is going to be good at the actual operations. It's rare that one entrepreneur has everything that you need. So I obviously am really good at marketing, PR, and public speaking, and I can handle the finance side. I have an MBA in marketing and international business, and I worked in private equity and at a hedge fund, so I cover that. But who's going to be the operations person? I always, when it was my brother and I, he did operations and the technology stuff. In this case, it's 9 of us now in Blue Moho Capital. The first person I brought on was to handle sales. Like, I couldn't be the only salesperson and handling. So I decided, let me train somebody to handle the sales part, give them systems and processes. Here's what they say with the first email. Here's what you say in the second email. Here's a script for the phone call. Here's what they're going to put in Excel. Here's how we follow up. Great. They then did that. So I could now shift over to focusing on the actual portfolio. And we need to raise the money. Somebody need to deploy it. Well, I can't train them to deploy the money. That's risky. Let me focus on my part, train somebody or find somebody already good at that. I think sales is the first thing you need to bring in. I need a rainmaker. Somebody have to bring in money alongside that founder. You need operation. We brought in a chief operating officer that can help us fine-tune systems and processes. I think that's important. And then the last one, out of the four that you need at the side, is somebody to actually do accounting. It doesn't have to be internal. It can be just an outside consultant, but you need somebody to actually track the money. It's scary. People don't think about the fact that I still have to file taxes. Even if my company don't make money, I need to file the tax return to say I didn't make money. And if you take too long, you're in trouble. So I've seen people who have those problems because guess what? You want to go to an investor and they're going to ask you for your financials.
Yeah.
Nobody was doing it. So this receipt over here, this over there, that over. It's like, oh, geez, let me get my financials together. I need 2 days. Well, if you could do it in 2 days, that's amazing. I need 2 weeks. Well, you missed the 2 weeks. So get somebody top of your numbers. I mean, that's just so important. Externally, you're going to pay a lawyer. You need legal help. From day one, you need to be having proper contracts. You need to have, whether it's internally with your team, you have NDAs, non-disclosure agreements, non-compete agreements. If you have vesting, you need to put that in there. But don't be penny wise and pound foolish on the legal side of things. I think people don't understand that. We've spent way more money on legal over the last 2 years than anything else. It's crazy. I still can't believe how much we spent, but it's worth it. It saved us so much more trouble. And people took us seriously when they realized that we have 4 different law firms working on 4 different things with us. Whether it's trademarks, we have a different law firm to deal with trademarks. Securities, we have that. So those are the things I think you need to cover. But start with somebody that can present and somebody that can actually handle the sales part, and then with operations and beyond.
Great. Jonathan Morrison is asking, well, if you would be interested in seeing business ideas that could take advantage of the opportunities you were speaking about earlier. I guess that's reach out to you for a discussion kind of.
Well, the answer honestly is it would have to be a profitable existing business in really strong long-term growth industries. I am not a venture capitalist. I'm not an angel investor yet. Right? My capital that I could put into an early stage company has gone into an early stage company. Gone into Blue Mohawk Capital.
No, because
I don't have any extra money to go and deploy. Like if I ever go and put money into something else, it's because my shareholders, my investors in Blue Mohawk have gotten a return, not just their money, but a return on their money. The last thing my investors want to hear is that I have run off and taken some of my money to go invest in something else that they do not benefit from.
Yeah.
And so Blue Mohawk is not designed to be a venture capital firm. We are not here to be SoftBank or Sequoia. It's Berkshire Hathaway. So so that's where we would start. I'm always happy to give my 2 cents. Up to today, I got a WhatsApp from somebody in Jamaica asking me some advice. So I'm happy to give advice. You just have to send me a direct message on Twitter or Instagram.
Yes.
I'll reply. You guys know that. I will reply. And it's
David will definitely reply,
My team sees it as well. So please, I just being very careful. Don't slide into my DMs. The whole team sees it. We've had a number of issues. It's not like, wow, I didn't expect that.
Yeah. That and that's an inside joke for us because my wife and I did a video and my wife decided to warn the world that nobody should slide into my DMs.
All right, so here, how about this? I'm going to give you another inside joke then. So we have some of my team watching. We actually have a term for those women who message me. My initials are DM, David Morning. So we call them the DMers. And we literally are called the DMers. I've literally had people message me and I reply. I was like, that my team send the messages.
Yeah.
They wait 5 minutes and then later, they just send me the phone number and say, call me. I was like, oh, block. Like, no, guys. But wow. I joke with my wife. I need to post more pictures that remind people of my wife. But then also at the same time, my wife doesn't want me to actually post pictures of her and the kids.
Yeah, there's that balance. Yeah.
Exactly. We want to minimize. They're not the ones that are public. They shouldn't end up having their privacy compromised because
Agreed.
The father, the husband wanted to be a positive role model for young people around the world. That's they're married into this. She married into it and she agreed, but there's a limit. We don't need to keep posting her all over the place.
Yeah, agreed.
We do
right.
take as many pictures as possible with the ring on.
Agreed.
So Sashana is asking for you to explain dollar cost averaging.
Oh, okay, great. I want to hear you explain it. How about that? Because you guys talk about this all the time, I'm sure.
Well,
let me
yeah, let me see what I can do here.
What price you want to get it right? Maybe I shouldn't offer the price.
So the idea is that I look at dollar cost averaging two ways, right? So there, if you buy a stock at a price that's lower than the current price, and you buy it at that price, your average price is going to be in between those 2 points that you purchased. So the idea and the concept of dollar cost averaging is that over time, your cost will still be lower than the current price of that asset that you would have purchased. So because of stocks, for example, that are volatile, if you only buy once, you really don't benefit from the best price long-term, because if you buy and hold and maybe it gets lower, then you can average lower. If it goes higher, you can get more units and have still have a lower cost than that market price. So,
right. So we know there's a famous quote about time in the market beats timing the market.
Yes.
Is it still interesting when it said that? So dollar cost averaging allows you to not have to worry about timing the market, trying to figure out when is the best time to buy. No,
exactly.
The amount of money I put in the market every month, and here's the stuff I'm buying, and I just buy the same thing every month, and I just do that for the next 5 years, 10 years, however long you're building your nest egg for. It also allows you to just focus on earning your money and not be stressed out over, oh my goodness, the market is up and down, up and down. Yeah, well, I'm buying, and my price will be averaged out over time. The cost of what I've purchased averages out over time, and we do the same thing inside Blue Moho's portfolio. I'm not buying every month, but we do average down over time. I don't just buy a lump sum and then sit down on it. There's some companies I would do that for if they're really heavily undervalued, but ultimately I can't predict what's going to happen next. So it makes it easier to be an investor in a dollar cost average. Just put in the same money every month, consistent. The same way you used to save in a piggy bank as a kid. Just do that. And live a free life.
Agreed, because one of my most successful stock purchases of all time, I won't name the company, I used to buy every 3 months from salary regardless of the price. And now when I look at the average price, I'm just amazed, because I know that I've bought it 3 or 4 times the initial price, but because I have so much units now, the average cost is, pretty good. So yeah.
Love that.
All right, cool. So we're getting some feedback about the meeting. Felt intimate, really enjoyed it. Keep it up. A lot of persons saying, the nuggets, the gems were definitely there. Shauna K is saying that this feels a bit like a masterclass. So
that's exactly what I did. I emailed you and said that's what I wanted to feel. I needed so much time. Okay, I think this is something that I really dislike, and nobody really asked me about it, but the people who have been successful, whether in business or creating wealth, who don't share knowledge. And that's the difference with Michael Leach. Right? I've known Mike for 11 years. When I sat down with Mike 2 years ago, and we had a 1 hour meeting that changed my life. And I asked Mike after 45 minutes, what do you want from me? I mean, this is unbelievable what you've committed to do. And he said, I only want one thing. You're going to pay it forward. Everything that I share with you, you need to share with the world. This is not to stay between just you and I. Please go forth and share it.
Yeah.
That's what I cherish. And that's all I want to do. That's all I want to deliver. Like he said that every time you meet with someone, you should exceed their expectations. Always exceed their expectations. So if you meet me for a minute, meet me for an hour, 2+ hours, I want to have exceeded your expectations, which means I need to be more transparent than most people. I need to be a little bit more open than most people. And I don't mind that, because I need you to realize that I'm just like you. I'm not that much smarter than you. In fact, probably some way smarter than me. I've gotten a few opportunities that I took advantage of, and I had a different mindset. You can do it too. You don't have to be fabulously wealthy or living in America. Right? There are opportunities that you can take advantage of.
Yeah, agreed. And we are definitely benefiting from that. And yeah, it's I really do appreciate that your messaging is consistent. Like if you follow David on social media, you see
Yes, it is.
giving
All of them.
giving back daily. So we definitely appreciate that. That's what we're founded on as well. The idea that not one person is smarter than everybody else. So we learn as a community, and it's great that persons like yourself are willing to give back time, because we value a person's time. Like this time is time that you could be spent doing something else, being making money, like whatever it is that you could be doing, you decided to spend it here with us. We greatly appreciate it.
No, and I appreciate the platform and the work that you're doing, because financial literacy is so important. We don't learn enough about this stuff in school, and most of us don't get to learn it at home. And so you guys, thanks to technology that didn't exist, YouTube came about in 2005. So this technology didn't exist 16 years ago, 20 years ago. So it's really good of you guys to leverage it. And because I know you guys have started with a prayer, like literally, this is about teaching somebody to fish instead of giving them a fish. And that's important. That's exactly what we're supposed to do.
Yeah.
As is teach each other.
Yeah, agreed. So what I'll say is that if we missed any questions, guys, please post it in the comments below after the video, and we'll definitely just tweet it out to David, and I'm sure he will respond.
Why you need to tweet that? I'll answer it on the tweets, but I'm going to log on to YouTube and answer. I have a YouTube channel.
There you go. Perfect.
I think I would log on and answer every single question, and if you want to ask it privately, then DM me the private, because there's some people who DM me the message, DM me the question, I'll answer it privately. That's not an issue at all.
Perfect. So I see one from Denico. Hopefully I pronounced that right. To what extent do you see shared ownership being the way of the future? Do you see it going beyond mobility?
Ooh, that's interesting. So not just the whole mobility as a service that we're seeing, for example, with cars, but going beyond that. So I think it is going to change, right? We have limited space in terms of land mass, right? The Earth is majority water, right? 70% water.
Right.
So if we're going to have 11 billion people, what we're going to build up. So are we going to share more of our space, our house? There are people who don't actually live the same place all the time. And Airbnb has already shown us that sharing the economy. What happens when that expands and we say, we have been making too many things in this world? You think about the landfills and how much stuff we're doing. Why can't I share tools? Do all of us need to have an individual hammer that we don't actually use all the time? No. Right? I could share the hammer amongst 5 of us or 10 of us or a website. So I do think it's going to go way beyond, because we are going to realize that we humans have been wasteful with resources. Right? We didn't look at cradle to cradle. We did stuff for cradle to grave, and we want to toss it into this landfill, which, especially on islands, is finite. We can't really go and have too many more landfills. We're going to run out of space that we actually need to live on. So I do think it's going to go way beyond mobility. I think it's going to get to the point of physical things. I think tools are the next big one that people say, man, I don't need all this stuff. Let's share it. Borrow the screwdriver.
Yeah, that makes sense.
That's such a great concept, because one of the things that I thought about, for example, with COVID, I was like, I always thought it weird when I saw buildings or office spaces being made like 20 and only 2 rented. I'm like, if you decrease the cost of that space, there's so many ways that it could be repurposed or used. But the concept of sharing, I mean, you have 2 of something, somebody needs 1. I wish more persons were like that. We as a community wish more persons were like that.
Most people think vertically. That's the problem. Instead of horizontally.
Lateral thinking is important, but look at that. You talk about office buildings. Well, what happens to the office building at night?
Yeah,
it's empty. I'm literally here, and there's nobody else in here. Well, that's another 8 hours or 12 hours that it could be useful. It's empty. Yeah. When we find something at night to do in that same space that is now useful for others, let's figure out ways to maximize the use of it. I definitely think somebody's going to find a way to do that. I do think tools are really the next thing. We have too many things. I want to keep it. We really make too many things, and then we collect too many things. And then when you move in, it's like, man, why am I have so much stuff? I mean, there's stuff right now. My wife going to laugh. We have in the garage. We don't have storage. It's in the garage. Right? 2-car garage, and 1 car can fit in there. We
All
moved
of us.
4 years ago. Have I missed any of the stuff? Of course. So one time you go in the box, you find one thing. Oh, I missed this. I didn't remember I had this. Oh, we missed it for the 4 years. We did not need it. We didn't need it. So yeah, let's learn to get rid of stuff and have fewer stuff and then share stuff instead.
That brings up an excellent point. I really don't know if you miss the Black Panther. Do I go there? Like it's behind you right now. You haven't used it the whole meeting.
You're not getting it.
Hold on.
Yeah, you haven't used it.
Well done.
You try to segue from us collecting too many things to try and capture my Black Panther thing. This
Well
no.
done.
You know what? Really segue. That is a sign of a professional. Wow.
I had to try. So this is a non-investment question, David. Well, it might be. Let's see how you feel about it. Nico is also asking, given your continued emotion, he's asking about your continued emotional investment in Arsenal, given your investment philosophy.
Oh.
Hold on.
Oh.
Wait, go over and what's the question? What's the question now? The rest of
Boy.
Nico wants to know. He's asking about your continued emotional investment in Arsenal, given your
Hold
own
for the long haul.
investment.
Hold for the long haul. Hold for the long haul. Hold for the long haul.
Where is it?
I know that Dane is happy to see. I know Dane is an Arsenal fan as well. So shout out to Dane.
I'll be honest. So I don't know if I have an emotional investment in Arsenal, but I've already been. I married them. As far as I'm concerned, so I'm not going to divorce them now. I've been there too long. I used to switch from Arsenal to go find another team and then have to learn how that team behave and get used to them. No, I know this one. So I'm gonna stick with the evil as I know. And call it a day. Right? It is a profitable team, unlike most teams. So our stadium is paid for, unlike most teams. So I look at those things. Trophies are great, but it's a business. And it's still more fun to watch Arsenal play than most teams. But I watch all football, right? I played football. I enjoy football. So yes, I bought a Marcus Rashford jersey from my brother. And I have a PSG jersey. Actually, I have I have as many PSG jerseys as Arsenal. I just don't wear them. I like the Jordan thing. But Mbappe, like, come on. I love watching these people play. So I am a lover of football. Arsenal is painful at times to watch, but is a girl said this to me, I remember I was this is a World Cup, I was at Spanish Court Hotel at the bar. There's a guy in his Chelsea jersey, the girl not in a jersey, the lady. Turns out they're doctors and my dad taught them at UWI Medical School. And I'm sitting beside them and the girl asked me, which team am I a fan of? And I said, Arsenal. And said, oh, you're the best kind of guys to marry,
Wow.
The guy in the Chelsea jersey, who actually is with her, is like, what do you mean by that? And she said, oh man, if you can marry an Arsenal guy, it means that they can put up with anything and they not leave. I was silent.
Wow.
I was just like, so the Chelsea man run off and come back.
We're definitely gonna make a clip of this. I'm just gonna say that.
Yeah.
Wow.
But you know what? Was she lying?
Well, knowing yourself, knowing Dean, I'd probably say she's telling the truth.
What's on? Yeah. So I will keep working with it. So my wife bought the Arsenal jersey as well. She actually captured my last one. So
I like. By the way, this is outside the thing. I like what you do. You guys have a jersey for every year you were married, correct? That is actually pretty cool.
Well, it's not that we have a jersey for every year, but I do have a jersey for almost every year that we were married. Yeah.
You're giving my wife ideas now, David.
And typically she will get the third jersey is what she really likes. The third, if it's a nice third jersey that year, she'll capture mine actually. It's not that she gets her own. She makes me get one for her too. Or just take mine. And then I have to go and buy it. So. But no, I would say what we actually have for every year is that every single year we've been together, not just married, we go to Disney. Our anniversary is and actually next month is 14 years. Time really flies. But what we do is go to Disney. Since we were dating, we'd go to Disney World. We know kids everywhere is in Orlando. We go to Disney and we take pictures. So we have pictures with Mickey Mouse and Minnie Mouse every year since we were together, 3 years before we married. So we have pictures every single year going through with just us, first child, 2 children, eventually 3 children.
Nice.
Yeah.
That's an awesome collage.
Awesome collage. 15 years. Hopefully we make it to 15 and then we can do something big and show the pictures and people just gonna be like, man, you guys are obsessed with Disney. I hope you own shares.
I was about to get to that. Like,
we've owned shares in Disney since Luke was born. He's 9 years old. So yeah, we do own shares.
Yeah. Well, David, I mean, I can just, when I was backstage, my wife and I were like, are you catching these notes? Like there's just so much. And Orville said it. Orville is saying right now, the amount of topics that we've covered, the only thing left for him to do is transfer money to his bank account and just start investing. So, I mean,
you know what? Since we got into that family, I want to leave you with something that I think is actually more important than any other investing stuff that we talk about here.
Yeah.
And it's something that I learned at a family office, even 2 years ago. This is after I had my major surgery and major scare. And is the fact that don't worry about life balance. Dad would say you shouldn't use the word balance. I was thinking of a seesaw or a scale. What you need to focus on is that the family is the center of your universe. It's your son, and then everything revolves around that. So you plan your business around that. You plan your trips around that. And what time you get home around that. The family is going to be important because if you fail, they don't love you any less. You need to focus on that. That needs to be the most important thing. And it's something that I didn't think about as much. I thought I was going to sacrifice time with the family, time with my wife, because I need to make this business success so that we can live the rest of our lives like nobody could live. We could do all the things. Yeah, but what if I'm not around to do all the things? And I can't get back the years with my kids. I can't get back the years. So be very careful about how much time is sacrificed for them. I'm still learning that. If my wife sees this right now, she's gonna be like, I hope you take your own advice, right? but it was something this guy, Lonnie Gagnon, today Lonnie messaged me, it was so funny. Right? Lonnie is the CEO for this company, Wilkinson Group of Families, $3.3 billion US in real estate deals over the last 25 years. Average return is 22% a year. Like they've done great, mainly in affordable housing. He's out of Seattle. And Lonnie stood up there to do this keynote speech. And he said, I came to these people, I was telling everybody about business. The important things is that you need to have a team that's aligned in mission, vision, and values. These are the things that matter. And so the guy asked him in the audience, he said, okay, well, so you talk about doing that for a successful business, but do you have mission, vision, and values for your family? And do the same kind of meetings. You're doing weekly check-ins, you're doing monthly check-ins, quarterly meetings, annual meetings of the team. Do you do that with the family? And Lonnie said, no, I do it with the business. And the guy said, well, that tells me that the success of your business is more important than the success of
There you go.
Indeed.
The success of your business cannot be more important than the success of your family. Don't make the mistake I made for the 38 years of dropping the ball on family. My parents, my brother, whatever, my sister, and then focusing on business. I want to be this success or your career. And then you realize that, crap, the people who pick me up when I have the surgery in hospital, the people that are going to take care of me, it's them. That's who showed up. So
always in your corner.
Always in your corner. So make sure you have those people, right? You keep them close. And your real friends, the real family. Focus as much as possible on that, right? We're not going to say it. I haven't done this one publicly. I did it in a podcast yesterday morning. I realized it's something I don't talk about much. It made me sad to think about it. But I got rushed into surgery. This is 2 years. February last year, February 3rd, I got rushed into surgery. And the doctor said, I don't care if you don't believe in God. You kneel down and pray. Like you have a 30+% chance of not waking up. You need to. I had my parents get on the phone. They were getting ready to drive up to me. and he needed to explain what was about to happen. He needed to give the bad news. And he's like, you need to call the executive of your estate, and you need to call their wife. So my brother is the executive of the estate. He's younger than me. And he said, no, I go first. I'm the one with the heart condition kind of thing. I'm the one whose heart has stopped before, right? And then, of course, my wife. And I'm telling her, oh, don't worry. You know the life insurance policy, man. You're good. The family is good. Robert know how to buy the Berkshire stock. And you guys are, oh, you're going to leave me with 3 children kind of thing. And I focused on the wrong thing. So when I knelt down to pray, though, I said, all right, guess what? I'm a spiritual person, not a religious person. But I literally was praying aloud to God. I was like, you know what? I need a second chance. There's only 4 things that came to mind, 4 things. I have these regrets. Only 4 things pop up into my head before I go into surgery. I said, number 1, this marriage has not been perfect over the last few years, and I have also been at fault. Give me a chance to either fix it or we're going to move on, but we're going to at least heal. Yeah. Let me come back and we need to heal this. That's number 1. Number 2, my son Luke at the time is 7. And I had been living in Germany for 3 months. I went through an accelerator program over there from September through the end of November. And I was thinking, wow, this kid thinks that his dad is the most awesome person in the world. I've gotten him to meet President Barack Obama, right? First black president of the United States. We got him to go and actually meet Mark Hamill. He's named after Luke Skywalker. He met Mark, right. Hug him, kiss him, autograph the poster. Luke, the force will be with you always. Your friend Mark Hamill. Nice. Call him Uncle Sean Paul, Auntie Tessan, Tamil, Wayne Marshall, T.O.K., Wayne Wonder, all these people. Luke is just like, it's normal. Daddy's awesome, but Daddy wasn't always here. He was always traveling. That's what I thought. He said that. So I was like, man, I need to come back. Give me a second chance. I'll fix that. Middle child is Liam. Liam is 2 years younger than Luke, and Liam calls me the mean daddy. I didn't know middle child was the thing, right? I'm the oldest, so everybody was compared to me in the house. So I compared Liam to his brother. Oh, why you can't be like Luke? Why you can't sit down and behave? Why you can't do your work? Why you can't get kids? Do not do that with your kids, please. So I said, you know what? I need a second chance because if I die tonight, this kid is going to think that Daddy was mean. And that hurt. And then the last one is Lila, our youngest, right? Lila is now 3. By the time she was 1, and I'm January 12, she's January 21. So I was like, man, this girl, when I came back after Thanksgiving from Germany, I never forgot. She wouldn't hug me, wouldn't creep. She run away. She cried. She creep away because she was 7 months old when I depart, and I come back and she just knows this guy through FaceTime. That's when her memories were being formed. I chose business over the family. So for the next few months, it's weird. Go after to surgery, and I might not come back. And I'm thinking that this little girl is going to hear from her oldest brother how awesome Daddy was. She's going to look at all these videos of Daddy and see, listen to all these podcasts, read all these articles about me, read the columns that I wrote. But I wasn't there when she was actually forming her memories. I was like, I need to come back. Like, please make this surgery work. And then I went to surgery and then wake up hours later. So ever since then, I came back and I was like, I need to make time for them. It's just, you don't know what it's like to be told that you might not come back. At 38 years old, like you just don't know what it's like and the regrets you have. Please, everyone, focus on the people you actually love and maximize the time that you spend with them. But you cannot, I don't want any of you message me and say, boy, I did kneel down and you had the same thoughts as me. That shouldn't happen after we just have this discussion.
Yep. I said the same thing to the group today, that you take every opportunity to tell the persons you love that you love them. And I do encourage them from time to time that focus on what matters. We're investors, but our family comes first. Man, David, excellent testimony. That's all I can say. I'm glad the Lord answered that prayer for you. Yeah. So David, thank you so much. We definitely need a part 2.
Oh, wow. Yeah.
We're going to trust me. I know we got a bunch of questions that I can't answer because of the SEC regulation. Yeah. We need to be super cautious. I did promise one big announcement though. So
yes. What? Let's go.
So we actually met with our securities lawyer earlier today to make sure that I didn't run into trouble. So which one I could say versus which one I can't say. So the announcement is she did form it, but so everybody hears about Blue Capital Partners Inc. That's the C corp that we have. The announcement is that we have formed our asset management subsidiary, Blue Moho Capital Management, today.
Oh,
Blue Moho Capital
nice.
Management. And we do have a private equity deal being executed. It's not in the Caribbean, but we are going into the fund management business. That's
Interesting.
we will have an entity that is registered, and we're going to be able to do funds in multiple jurisdictions. Let's just say
Nice.
Interesting.
Nice. That's excellent news.
we're very excited about that and where that goes. So I literally, when she told me today that we filed the paperwork, I was like, it's been in the plan, in the business plan for 3 years. And we execute now and be at that stage where we feel comfortable that we can really move at scale now. When I say scale, guys, I'm not talking $1 million US scale. We have something that's about to drop.
Can't wait.
Looking out for that. Can't wait.
90 days is what I'm going to say. 90 days.
Okay.
It's going to be amazing to make these announcements. And I can't wait to just help. Again, just fly the flag high. Like black, green, and gold. Jamaica helped to make me who I am. Miami was very integral to that as well. But Jamaica gave me confidence as a black person to feel that I could achieve. I saw people that look like me, who sound like me in business, in politics, in investing, in banking, not just in certain areas. So don't discount how important that is within our culture. Right? We talk about little, but we talk about, we actually don't realize how big Jamaica is as a brand, how well known we are, how good we are. So leverage that and don't tarnish the brand. I would say we are automatic ambassadors. Whether you want to be an ambassador for Jamaica or not, when you open your mouth and they hear that, you are now an ambassador for Jamaica. So carry yourself in a way that would make all Jamaicans proud. That's my ask of everyone. So we
agreed.
And I'm going to, I'm going to show it, right? We have to talk about it. You guys can.
The good.
So we're talking about this before, and we definitely need to schedule. David has promised on social media a tour of his office, like a year ago, and so we're definitely going to need to get a tour. I'm feeling like we need like a L.E.A.R.N Grow exclusive. Like I was gonna ask for an investment masterclass series with David, and then we just kind of did the room tour at the same time. You know what
while the masterclass is going on.
Yeah.
I can do that.
Sounds good. All right, cool. So Shauna K is saying that she's gotten way more than she expected from this session. Definitely, we can say the same. Yeah.
Indeed.
All right. Well, I do have more to share next time. I have a way that I want to do it. I need a flip chart or a different camera, but there's still a little more that Mike has taught me that I want to share with you guys. So consider this the first.
Yeah.
Again, don't think that I'm not available. I want to be accessible. I really am on social media. Yes, I post as well, but send a direct message. I will respond. I'm not that person that don't want to talk to you. I want to share. I want to give up my time. And I'm happy to do that. Please learn from my mistakes. Do not repeat my mistakes. Make some new ones and then share them with me.
Yeah, agreed. All right, cool. So David, thank you so much again. I think everybody can attest to just how valuable this session was. Our entire community, thanks you so much.
Indeed.
And so thank you so much, David. You're free to stick around if you do have the time. We have some giveaways. That because next week we're actually celebrating 1 year on YouTube. So
that's big.
Yeah, it's big for us. So we actually have some giveaways that we are just itching to give away. So I'm just gonna share my screen. So if you're able to stay, great.
I'll stay.
Okay, perfect. All right. So what I'll do, let me share my screen. Let me close some things first. I know Kefrash has been waiting for this giveaway from like.
We're going 2 hours and 28 minutes of
no, well, I mean,
good conversation.
Listen, you're definitely gonna have to watch this meeting over and over again, because there are a lot of things that you like, layers on top of layers of gems that, yeah. All right. So the giveaway was that you should go to our our Instagram or our Twitter page, retweet, copy 2 persons. Those were the instructions. Hopefully you followed it. So I'm going to announce the winner now. And if the winner is not in the chat to claim the prize within 30 seconds, we go to the next person. All right? So that's how it works. So I'm going to hit start. So this is for Instagram. All right. So Akamar Lux, hopefully I pronounced that correctly. You have won. You have won $10,000 and a financial planner from Cerebral Massage. So mods, please look out. If she doesn't claim it in 30 seconds to a minute, I'll choose someone else. And so let's do the Twitter one now. All right, let's start. All right, so actually, Justin, I think we all know Justin.
Awesome, Justin.
Congratulations. Congratulations. All right, so Justin has the Twitter prize. Has anyone seen? I'm not sure of her real name.
It looks like AKA Marla Rocks.
Yeah.
That's how I'm thinking about it.
She here? All right, so I think we may have to do a replacement, unfortunately. So let's see who the runner-up is. No show. Okay. All right, so our next winner is... All right, so Galeon has won. So congratulations. Yes, of course, she would be in the comments and saying that
yes,
she likes
is.
Of course, why not? All right, cool. So
what's the prize?
So they win $10,000 gift certificate from Victoria Mutual, our sponsor, and a financial planner. Right? And so next week we actually have, well, those giveaways are a surprise, but we have some merchandise from VM. We have, well, I'll just say it. We actually have Learn, Grow, Invest merchandise that we'll be giving away next week. So you definitely want to stay tuned for that one. So that giveaway will be posted tomorrow. All right. All right, cool. So I think, well, wait. I'm just realizing he's just in here to claim his prize. I can't do that.
Yeah, that's actually very true. It has to be fair.
Yeah,
Justin,
so just
if you're not here.
All right, going once, going twice.
Somebody call Justin and tell him get back on.
I'm not missing.
Yeah, in fairness, we have to give it to somebody else, right?
Yep.
So, all right, so King Dwayne 101, is he here? All right, so
I don't see any messages yet. I don't see a message yet.
Going twice. All right, so the next one is Financial Wise. Is Financially Wise here? Okay. Next one is Venture Capital. I think, no, wait, yeah. This one is from Twitter as well.
Wow.
All right, I guess, all right, let's just take somebody from... So Kefa is willing to deliver it to him personally. It's a sacrifice he's willing to make. I don't know. So these are the runner-ups. What we'll do, since we announced 4 winners, the first person to reach out to us will be the one who wins the prize.
Let's see who's gonna come back and find out. Somebody tell somebody something.
Somebody tell somebody, but if nobody claims it tonight, then we just add it to the giveaways for next week. All right, I think that's fair. All right. All right, cool. Man, free stuff being given away and you're not here. Like, I don't know.
Wow.
I don't know. All right, cool. So thank you so much, David. Again, it really feels like we could just talk for hours, honestly, but really do appreciate it. And we will definitely schedule that masterclass, and I will make you a compelling offer. Yeah, I'll figure out what I can trade you for the Black Panther memorabilia. Yeah, we'll figure out.
Really want the Black Panther?
Work out something.
If it's going like that, the only thing I would love to trade for, but there's no way he's doing it because no, he can't, because his son put it together. It was given to him as a present. No, not the Hector one. The James Bond car.
So you want the James Bond car? You want one?
Yeah, that I am more a huge fan of Bond than I am of Star Wars. I love Star Wars, but I am a Bond fan like crazy.
I'm not putting it apart. It's put together already, but I'm willing. So we own 3 of them. We actually have 3. Luke has one, I have one, and my brother has one. Yeah, I have 3 of them.
Right, I remember you guys had. Yeah, I just remember you said that you all built them.
So come up with something. I'm willing to part with one of them. Come up with something. I'm willing to part with one of the Aston Martins, the Lego Aston Martins. We have 3. Okay. I want to keep these. So I have my Usain Bolt shoes. These are all right. So these are autographs. I have one here, and then I have a pair in the box, and I'm trying to figure out a way to do a giveaway related to them. So I'll figure that out. Talk to you.
Well, so David, we're having a giveaway next week. So
I think we should incorporate that into the next time we do
into the math. Perfect.
Yeah.
Autograph.
That could be his giveaway.
An important thing is that we have the certificate of authenticity as well. So
nice.
Yes, you know.
Yeah. I think we trust that once you say it's the original. Like...
No. You must have certified. You can't just trust but verify.
All right, cool. So our winners are in the chat. Okay, guys, just DM us and we will get it sorted out.
Okay.
Yes, please. I think my wife would be okay this one with it. So, all right. Edna is asking for an encore. Unfortunately, Edna, it's definitely. I think you should just subscribe to our channel. Look out for the next one.
I can stay here all night, you know.
Yeah.
Remember, I'm in Miami. My wife and kids in Orlando right now, so I'm going home to be alone right now. I'll be honest, I'm going home to be alone.
Okay, all right. So Edna is asking for an encore. Teresa says she loves your personality and she apologized to the wife in advance.
Don't do it. Don't do those. Don't do it.
No, she's no. My wife is fine. My wife is not a jealous type. She gets it.
Okay. All right. Cool. So I guess we'll just say final thoughts. Because I think, well, if there were questions, we could continue. I'm not seeing any questions, and I think that.
Well, I'll give you a final thought, and it's something that I have not spoken about. I talked about it in a podcast recently, but everybody needs to find a coach or a mentor like a Michael Leachin, and I'll tell you why. So this is my birthday this year, January 12th. Mike is January 3rd, 1951. I'm January 12th, 1981. So I messaged Mike on his birthday and say, hey, Mike, thank you for everything that you do and represent. I think of you like a second dad. Happy birthday. And of course, he's met my dad. That's how we met all at the same time. And so he, thanks, David, whatever. So on January 12th, he calls me. He doesn't message me. He calls me, which is weird. Every time he calls me out of the blue, I'm like man, you were like $2 billion. Aren't you like busy? How you calling little old me? And he calls me on my birthday and he says, I was thinking you're 30 years younger than me. We're exactly 30 years apart. I was 38 roughly when I started my investment firm. You're 38 when you started yours. But you have an advantage that I don't have. And whenever I know an answer, I can't help it. I just say, yeah, I know. I will pipe up. I haven't learned how to deal with that yet. And he's like, oh, really? What is it? And I said, oh, I have you as my coach which means I have none of your weaknesses and I'm not going to make your mistakes. I get to learn from all your mistakes. I'll make new mistakes, but I won't make your mistakes. I said, yeah, exactly. You're right. He was feeling in the dark when he became an investor. He didn't start out investing. He was an engineer who ended up selling mutual funds, who then realized that he needed a framework, and he started Warren Buffett. So he didn't have somebody to teach him. He didn't have a L.E.A.R.N, Grow, and Invest. But he still ended up being affiliated with $6 billion companies, 2 publicly traded. And so he said at 70 years old, he's looking back on his life. He's impacted millions of people. He's donated tens of millions of dollars. And obviously, he's become a multi-billionaire. And he says to me, David, I'm going to work with you and help you to accomplish much of the same. Your homework for 2021 is to tell me how many more unicorns than me you're going to be affiliated with, how many more people than me you're going to positively impact, and how much more than me you're going to be worth. And I was like, Mike, you literally worth like $2.2 billion US. And he's like, yeah, and you'll be worth more because I'm going to help you and I know what you're going to do with it.
Mm-hmm.
When you have somebody that, I get in goosebumps right now thinking about it, when you have somebody else who believes in you that much, like they see in you that you don't even see in yourself. It allows you to end up thinking that you can conquer the world. You need to have one person in your life that just say, you know what, I've been there, I've done it, and I can help you, and you will then go there and do it even better than me.
Yeah.
Every single person, don't stop until you find that person to coach you, because it really does make a difference. When those naysayers hitting you and the haters saying, man, you're full of yourself or you can't, why do you think you can do that? And you just go back to that one person. Remember, they believed in me, and that's all that one person believed in me. Find somebody like that, man. Please find.
Yeah. Agreed. Excellent point. Thank you so much, David. Thanks for everyone who dropped in. We had close to 400 persons who dropped by tonight. So excellent session. Thank you, David. We will definitely speak soon. Take care, everyone.
Thank you.
Thanks, everyone. Thanks, David, again.
Yeah, man.
All right. Bye, everyone.